All right, welcome to panel 2 and part 2 of the forum. I warmly welcome some new faces, which I see among the audience, and I want to sincerely thank you for having the patience and the tolerance of staying with us. Because this hall was full just an hour ago, and now people have gone to the beach. So it's Varna after all. My name is Javor Velchev. I started singing when I was 5, so I've been passed the microphone way too many times. And I sort of should know what to do with this. I have the honor, which is prestige really, to lead the panel. And I have a jaw-dropping selection of speakers, which I personally wanted to filter out, and I really wanted to choose who to be on the panel here. It was a very careful selection. It wasn't just a shot in the dark. And I'm proud to sort of form a small family with the people who will be speaking in the next couple of hours. I'll close the door. All right, to avoid some external noises. In the panel, we have, it'll be a long panel, so be ready for some nice piece of attention. In the panel, we have a financial director of a shipping company. We have a couple of lawyers, one from Italy, one from the UK. We have a Turkish shipbroker. I'm not mentioning the names, that'll come in later. We have another commercial director from a ship-owning company. And we have a very fascinating trader who's involved in with startups as well, and myself at the end. I'd like to start with Mr. Ali Abuda, who was so kind to fly from Dubai, right here in Bulgaria, in Varna. I met Ali in Athens, where we both spoke on a conference that was a couple of months ago, and I was inspired by the way he stands and the way he looks on stage. So I approached him, and I very kindly asked him, would you like to join us in Varna and deliver some of your knowledge to you? And he accepted, so please welcome Ali Abuda. That's him. I'm passing you the microphone. Ali will be speaking about geopolitical challenges in a complicated world of trade and shipping. Floor is yours.
Thank you. Thank you very much for the kind words and an introduction. Again, thank you very much for the introduction and for the hospitality. It's very great to be here in Varna and share some of our knowledge on how we see the industry from a geopolitical and trade perspective. That's okay. Thank you. Yeah, I'll try to get closer. Yeah, so to kick off, today, as probably you all know, the shipping industry and the maritime industry in general is basically at a crossroads. There's a lot of aspects that's impacting our industry from the critical infrastructure, which we need all to focus on to kind of, bring into the industry into a level of compliance when it comes to regulations and so on and so forth. We know that the maritime industry looks after 80% or maybe even a little bit more when it comes to trade and cross-country transportation. And more than 70% of goods are basically transported through sea. The other strategic choke points that we are facing as an industry is basically related to the geographical structure of our industry. So we have the Suez Canal and the issues surrounding the Red Sea. We have the Panama Canal and the impact that took place last year, which has a very critical impact on the shipping industry. And also we have the Strait of Hormuz, which is a very, very important passage for a quite considerable amount of energy across the globe. And the other point that we are facing as an industry is basically the geopolitical shifts, and that's basically a very, very wide and large project and topic. So we have the trade war, which kicked off early this year when Mr. Trump took office. The impact of the trade of the tariff that he has introduced, and also the desire he has by making the US again, a hub for shipbuilding and ship managing and so on and so forth, which in all has an impact on the economic situation, or the global economic situation, which is already impacted a few years ago by some kind of pandemic issues and trade issues and so on and so forth. This is the geopolitical situation is basically working as a financial catalyst for our industry transformations. And by that, I mean today, geopolitical is not a political issue or kind of an issue that's been looked at by the politics or the politicians or the economics and so on and so forth, but it's actually a financial burden in our P&L as ship owners. And that can be translated by how we see the expense line items in our financial statements as ship owners. If we can see, on the graph, we've seen an increase across the spectrum of the P&L. So from a fuel perspective, we've seen an increase of about 30 to 35%. From insurance, we've seen an increase of 10 to 15%, and that's still in the rising, and also the crew, ports, and some other expenses. So this is undoubtedly becoming a financial burden on the balance sheet and the P&L of the shipping industry. And for that, I do believe that we cannot separate geopolitical impacts from a financial perspective and financial implications as a ship owners. There are some hidden situations which, if it kicked off, it might have even a worse impact. So we've seen a tension between China and Taiwan, and I think if that resulted in closing the Taiwan Strait, that's probably going to impact 50% of the global trade. And the same thing we've seen a couple of months ago when Iran and Israel and the Middle East were impacted by the 10 or 12 days war that took place. From an economical perspective, we've seen a market volatility impacted since the whole geopolitical situation kind of played an important role on the maritime industry, and that has a global impact, not only a geopolitical impact. Because if we see what happened in the US since the regime change, or since the new government took place, we haven't seen a recovery of the economy in the US prior to the new government take place. We have seen when the trade, when the tariff trade or tariff policies started to kind of kick off and impacting the global world, we've seen the financial markets has been impacted to kind of 25%, and so far we haven't seen a recovery yet to that level. And the freight transportation growth is also still kind of modest, and is still not even reaching the level of 2018, 2019, which is prior to the pandemic. And interestingly, the interest rate, which seems to be high for long. So last year, prior to Mr. Trump's taking an office, we were under the impression that the interest rate will decline, as you can see in the graph, from January 2025, and we expected that the interest rate will be in the range of 3%, 3.2% by June 2025. Today, it's August. We haven't seen a reduction yet in the interest rate, and according to the federal chairman and governor, we don't expect any reduction in this month. Maybe there will be a reduction of 25 basis points in the next meeting, and possibly another reduction in the meeting after, but that's it. So we do, as ship owners, expect that the interest rate will remain high for quite some time. And then the elephant in the room, I would say, which is the green transition. I mean, if we think about it today and have a reality check, I mean, are we ready for green shipping? we've seen a fantastic presentations in the morning. Yes, I mean we're optimistic. We're happy to kind of consider shipping as an industry that contributes less to the emissions. I mean today we contribute I think about 3% to the global emissions, but it's still kind of challenging to really have a comprehensive solution which is going to assess the emissions. From an investment perspective, I think there's a huge debate between investors and regulators in terms of what can be done. I mean, if you look at the graph, we all know that we are targeting 2050 for zero emissions. But to reach 2050 zero emissions, we would be looking at least $1.5 trillion of investments. In the next 5 years, out of that, in the next 5 years, we would be hoping that we could invest up to $500 billion to be able to take the kind of a progression in terms of reduction by reaching 20% by 2030. As of today, I don't think we're ready. I don't think we have the investors ready to put in $500 billion in the infrastructure to reach that milestone. And that's mainly because there is no clarity in terms of return on investment. And there is no clarity in terms of what is the right solution and what's the right technology and the right policy and so on and so forth. We've heard a lot of initiatives in the morning. I mean, it's good, they're fantastic, but are they going to lead us to reach 20% reduction in 2030 and 0% reduction in 2050? I don't want to answer that question, but I think it seems quite challenging. And that's why we will take you on the next slide to talk about what's the challenging we have today or we're facing today in terms of capital allocation. Investors are still a bit reluctant when it comes to investing in in green shipping. And if you look at the spectrum today from a supply and demand perspective, I mean, in the oil supply and production, which is basically the main driver for the global economy, we see that the production is still increasing. And I think the last numbers from the OPEC shows that there's $2.5 million increase in terms of supply, which is not offset by the demand, which is basically increasing by around 600,000 barrels per day. And that gap is still probably a gap that we need to consider because it might impact the market in the near future. Balancing profitability with sustainability goal. Again, I mean, this is something that we've touched base earlier today on the presentation, because as of today, we don't know what's the right fuel to invest in. We don't have the right infrastructure across probably all the ports in the world, and we don't know as ship owners today what's the right technology, type of engine, and type of fuel that we should invest in if we are going for a new build. And I think that's one of the main issues for ship owners today, not go and go for new build in a very strong way or prospective way. From a fleet perspective, again, I mean the fleet growth versus the demand in 2025 projection, it's still not encouraging a stable economy, and that's mainly because we have a growth in a fleet increased by a few percentage comparing to the demand, and that might also have an impact on the commercial side of the shipping industry and the ship owners. And the very hot topic of the economic volatility, which is basically still uncertain as we speak today, because we don't know what Mr. Trump and the tariff policy and how it is going to impact the shipping industry. I mean, the latest is probably the intention of the shipbuilding perspective in the US and the tariff that they have placed on the Chinese-built vessels and the Chinese operators' vessels. And if you look at the spectrum today, I mean, Chinese shipbuilding, ship financing is dominant in the market. So we probably have about 60% Chinese dominant market when it comes to Chinese element in the shipping industry, either through ship finance or through shipbuilding. Yes, there is kind of initiative to have South Korea encouraging the US and so on and so forth. But as of today, that role I think will impact the shipping industry, because the US is not ready for shipbuilding, and it won't be ready, I think, in the next few years. And that's mainly because the cost of shipbuilding in the US is probably 3 times the cost of shipbuilding of the same vessel in China. We don't have the right technology in the US, because the US a few years ago decided not to invest in that space. I think 5-6 years ago, the US it's a decision I think was taken by the policymakers, where they have agreed to shift the muscles, as they say, to places like China, India, Far East, and so on and so forth, and keep the brain in the US. And that's why we've seen the shift of Apple and all these big companies doing by building the spares and so on and so forth in countries where there's cheap labor, and then to do assembly there and only build the technology and the design in the US. And to kind of adverse that position now, I think they will need about 5 to 6 years to kind of build the capability in the US to be able to build vessels at a commercial value. And for the 5-6 years, if we are imposing this tariff on Chinese builds or Chinese operators vessels, where all the ship owners are actually impacted, I think there will be a gap in the market for 5 to 6 years, which might have also an impact on how the commercial aspects and the trade will take place. From a ship finance perspective, again, I mean, we've seen that there is a green ship initiatives which is in the market. I mean, this is increasing day by day. We expect the market to kind of attract about $18 to $19 billion in 5 years. But again, the question remains whether we have the right technology, whether we have the right solution for investors to be encouraged to kind of put their money into that type of business. From a commercial bank's structure, as you can see, I mean, there's a kind of almost 10 years, evolution of how the ship finance has been working. I mean, we've seen Europe decreasing from 72% in 2020 in 2013, where they were dominant in the market, to 49% in this year, or 2023, and that's mainly driven by the regulations and the green initiatives and the IMO regulations and so on and so forth. Whereas we've seen people or countries with less compliance regulations have actually picked up quite well, and that's basically reflected on how China and the ship finance and the ship leasing has increased from 25% in 2013 to 45% in 2023, and that's a dominant position where they have invested about 16% of what the market or the shipping market looks like today. Now, this might reverse because of the regulations, but again, I mean, I go back to my earlier comment. I mean, if this is going to reverse, then we probably will see a gap in the market in terms of shipbuilding and the order books in the market. So the position today in terms of ship finance, I think there's drivers, there's opportunities, but also there's kind of restraints and challenges. And the main restraints and challenges are basically coming from the regulations. Compliance regulations cost increased by 30% over the past year or so. We've seen the CII regulations, the EEXI regulation, and now the GFI regulations. So there's a lot of regulations imposed on ship owners to kind of be compliant with the IMO target to reach 0% by 2050. But we do believe that we don't have a clear path towards the 2050 target so far, and that's why we've seen some countries still a bit reluctant in terms of taking this seriously, especially in regions where there is a big reliance on oil, such as the region where I come from, where 60 or 70% is basically out of the country revenues coming from the oil and gas, which is unlike the European countries where they are less reliant on oil and oil production. And obviously also the reverse positions that we've seen across the global community, with countries like the US, for example, reversing their positions of the previous government and encouraging the drill baby drill slogan to kind of go and build and explore more and dig more and care less about the environment. So there's quite conflicted positions in terms of how to assess the IMO and how to assess the global initiative for zero emissions. I think the UAE and probably the GCC region has taken a neutral position in terms of how they play this, because of how the oil is important. 25% of the energy I think comes out of that region, and at any given point of time, there will be more than, I think, 20% of the global fleet is within the region, either loading or discharging, and that's a very, very important economy driver for the region. What have we learned from the previous cycles? I'll break that into three different graphs, one from the investment perspective on the S&P transaction, and the other one from a commercial perspective, and the third one is from a compliance perspective. So on the S&P, as we can see, if you look at the 5-year cycle that we've seen since the pandemic, I mean, there's always kind of a pickup in terms of activity towards the end of the year, and that's, as you can see, I mean, Q4 is always the highest in terms of the activities, and hopefully we would expect the same thing in 2025. Obviously, given the fact that the US is playing an important role in this, we have to wait and see what's the impact post the October 14th, when this regulations is in force, and whether this is going to be postponed or not. But this is yet to be discovered, I think. But if we take in the kind of how the market played out in the past 5 years, then we do expect the activities will pick up towards the end of this year. Again, I mean, there's the type of investment, the type of fuel that we're going to kind of select, because that's also plays another important role. We've seen last year, for example, shipbuilders and ship owners focusing more on LNG dual vessels or dual engines. That has declined this year, with a reduction of about 20-25% on LNG dual fuel, and a pickup of methanol dual fuel. And that's, again, another driver for ship owners to kind of decide what will be the future fuel and where should we invest. And again, I mean, this is not only a ship owner's call, but also government, or governments actually calls, because we need to understand what's and how the infrastructure is ready for the different alternative fuel options that we have in the market. Yes, we've heard earlier in the morning that the biofuel is picking up, and that's a good thing. But will biofuel be enough to kind of encourage ship owners to go and build 100 or a couple of hundred vessels and so on and so forth? That's again not there, because the commercial volume of biofuel is not enough to kind of bunker a large fleet, and if it is, then it's probably going to be only on the main ports across the globe, because we've seen 1 million metric tons being sold in Singapore. But if you look at Fujairah, for instance, the second largest hub on the world from the bunker perspective, we haven't seen anything. We've seen something in Rotterdam, but again, I mean, it's very selective ports with ready infrastructure, not even ready, but we can consider as ready infrastructure. So that is still not the right solution, but it's one of the solutions alongside the LNG, the methanol, and so on and so forth. And the last graph is basically the compliance. So the more we are complying, the more we are focused on ESG, I think the more rewarding will be. And if you look at the SP 500 for the listed company, we've seen that companies with a great compliance with ESG, with ESG rating and so on and so forth, they've seen quite a spread comparing to companies listed but without a proper compliance and a proper plans. And there's a lot of focus from investors on the ESG initiatives and the ESG compliance. And as you can see, I mean, there's about funds today across Europe and probably the globe managing around $30 billion worth of assets with ESG compliance. And we do expect this to increase quite a lot, especially with more focus and more kind of encouragement on the ESGs from banks and from leasing companies and so on and so forth. So at a glance, Gulf Navigation Holding is a public listed company in Dubai financial market. We've established in 2003 as a private company. We went public in 2007 in Dubai financial market. Today we attract more than 10,000 shareholders with a market cap of $1.5 billion. We've had a journey across the years with the obviously the cyclical kind of business impact, but our main focus until last year was three main business segments: ship management segment, ship agency, and the ship owning. We have a diverse fleet of tanker vessels, livestock vessels, and offshore vessels. And this year we've kind of changed the course a little bit, where we focused on fuel and storage and so on and so forth. And we acquired a company, a listed company in the US with assets in the UAE worth $1 billion. And that's where we are going to focus in the next few years. We wanted to kind of bring in solutions to ship owners who are calling Fujairah and the UAE in general to kind of find alternative fuel solutions, whether it's LNG or methanol or biofuel. So we have acquired this company recently. It was still in the completion stage, but we do have a very, very ambitious plan to kind of, bring in solutions to the industry when it comes to the alternative fuel and assist in terms of, reducing emissions for ship owners and so on and so forth. That's it for me. Thank you very much. And I would like to welcome any questions if you have any.
All right, this was Ali Abuda. I'm impressed. Really superb job. Your thought is running so fast. I think you're hardly managing to express out what you want to say. There's so much information, and all of it was very, very interesting, intriguing, really. I'm not a data person, but I think I learned a couple of things myself. So again, give it up for Ali. The next speaker is Mr. Konstantinos Samaritis. Kay, are you ready to take on the floor? I'm going to say a couple of words about this. Konstantinos is representing one of the P&I clubs, and that's the closest topic to what I do really professionally as an insurance specialist. And P&I has been my favorite subject for over 20 years. I do this on a daily basis. My role is a facilitator, whereas Konstantinos actually takes a position within an insurance company, a liability insurance company. And the club he represents, Britannia, and Tindo O'Reilly, really being the manager of the club, is one of the international group of P&I clubs, which are now 12. Can I see a quick show of hands of the persons who are familiar with what P&I really is? Would you? Wow, that's an impressive number. All right, so very few people here aren't really familiar with this. Just as a quick overview, this is really the liability insurance for ship owners and the companies that charter the ships, charters and ship owners. And P&I really takes care of all the risks associated with third parties, ports, environmental damage, crew, personal injuries and death, etc. I would leave Konstantinos to take you through the traditional P&I risks and also some of the new risks associated with protection and indemnity, and perhaps some FD&D aspect of it as well. Floor is yours.
Thank you very much, Yavor, for the nice introduction, and thank you all, the Shipmasters Association, Ship Possible, and the Chamber of Shipping for the kind invitation. I'm very happy to be here for the first time in Bulgaria. Although we are neighbors, I hadn't had the chance before, so I'm very happy for that. I'm trying to be very simple, very precise and concise to the extent possible. I know that the audience now there is very diversified, so not all of you are familiar with all these concepts, so I will try to be as simple as possible. Today's talk is, the title is P&I Risk and Shipping Disputes in a Rapidly Evolving World. This is obviously a very vast topic, which is impossible to analyze in detail today, so I'm trying to give a brief summary of the main issues. I will start with the traditional P&I liabilities, the well-known liabilities we are all familiar with, and I will then continue with the new types of risks and claims that arise due to the new situation. And finally, I will try to identify the key factors likely to impact the shipping disputes in the years to come. My colleagues in the actuary department have been very kind to prepare a nice pie chart for me. We in Britannia categorize the large claims as the ones exceeding the 1 million value. So this is the breakdown of the large claims we had in the last 5 policy years. You will see cargo, 36% predominant, damage to property, 22%, collisions, 9%, fires, 8%, engine breakdown, 7%, pollution, 4%, and so on. These are all traditional P&I liabilities. They're surely expected to continue to occur in the future, and the claims amount are more likely than not that they will go up due to various reasons. From our experience working in a P&I club, we see more and more public authorities exerting pressure, increased pressure on the clubs to pay more and more, especially in sensitive cases involving environmental damage and loss of lives. There is unwillingness of certain countries to provide port of refuge to ships in distress. We recently had this Supreme Court decision in Sri Lanka in relation to the Express Pearl case. That was a container ship carrying plastic containers with plastic pellets and toxic hazardous cargoes. There was one of these containers was leaking. There was hazardous cargo leaking, and the vessel was refused access and entry to 2 ports. I think it was in Qatar and India before it actually arrived off Colombo, Sri Lanka, where it was, the fire was caught, and then after 2 weeks the vessel sank, releasing billions of plastic pellets in the sea, creating a huge ecological disaster. Growing technical abilities of salvors. Salvors are more and more sophisticated. They use more and more means, technological means, which means that the wreck removal operations are becoming more expensive for the P&I clubs that are covering these. We see governments in certain regions that they ignore the national conventions and laws. We see unreasonable, inflated claims, opportunistic claims, so claimants trying to take advantage of a situation and put their hands in the pockets of the rich international ship owner and insurer. The increased size of ships also create issues. They render these ships are more difficult now to enter and to approach specific ports and locations. The casualty response is becoming more challenging, and also bigger ships means more cargo, and more cargo means potentially more claims. Fires, we see more and more fires in large ships, containers, ro-ro passengers, car carriers. These are due to, in most of the occasions, misdeclared hazardous cargo by the shippers, which poses lots of difficulties and challenges. We also have the electrification age now that poses additional risks in terms of firefighting, cargo handling. One good example would be the lithium batteries in the electric cars that require special handling and treatment and disposal. So how is the next day going to look like? Who knows? Who knows, really? Sanctions. What can I tell about sanctions? I mean, from a P&I insurance perspective, monitoring sanctions and performing due diligence creates lots of headaches and a huge amount of work, both for ship owners and insurers. The sanctions regime is extremely complex and potentially triggers disputes relating to counterparty relationships and payment defaults. It's therefore very important from a legal perspective for the parties to incorporate sufficient sanction clauses in their charter parties so that the rights and obligations are clearly and expressly allocated. Courts and arbitration tribunals in the UK have recently dealt with a number of cases involving sanctions. A couple of examples for your knowledge and information. We had the Catalan Sea case where the commercial court had to consider the owner's right to refuse to load a cargo by a Russian shipper on the basis that the owner had some grounds to believe that the actual individual behind that company was sanctioned. That was in the first instance. The court decided that the owner did not have enough evidence to prove that. And this is going on appeal because it doesn't really make sense, to be honest. We have another case that has gone up to the Supreme Court, that the court had to decide whether a party under a contract of affreightment was entitled to rely on a force majeure clause and suspend nominating performing ships under the contract on the basis that his counterpart had difficulty and inability to pay in USD because the parent company was sanctioned. So this went up to the Supreme Court. Owners won, if you're wondering. Relating to the sanction issue is the shadow fleets. We all know about shadow fleets. We know the ships out there are hundreds and hundreds. They're growing, not properly maintained, no proper insurance, engaging into evasive practices, STS operations in open sea, forged cargo documents, switching off AIS. This is all becoming more and more difficult for the shipping industry. So just think what will happen if there is a big casualty out there involving a shadow fleet ship. A big pollution, a big property damage, a big collision. Who is going to pay? And who is going to manage the case? Who is going to deal with the accident in the absence of an international IG insurer? The IG reinsurance cap is currently at 3.1 billion, with a particular cap of 1 billion for pollution risks alone. So imagine what will happen if there is such an incident without this protection. Certain countries may provide sovereign cover for some liabilities, but the problem is that if these ships become more and more, then more and more countries will start to lose faith and confidence in the system, in the marine insurance system, in the international conventions, and in their adequacy to deal and effectively respond to casualties, which is a big problem. We then turn to the war situation, war risks that continue to grow. We have conflicts and tensions in maritime regions. Everybody knows about Middle Sea, Russia-Ukraine war, Houthis, Israeli-Hamas tension. These all result in disruption of popular and usual trading routes and trigger increased claims and incidents relating to cargo damages, safety, and delays. There are clauses. BIMCO has published a couple of clauses, a few clauses, void war, con-war time, that owners can invoke so as to refuse to perform center voyages or comply with charter's instructions if that would expose the ships to war risks. But there are always knock-on effects on taking longer routes and avoiding the usual routes. So, by example, taking the route around the Cape of Good Hope would expose the ship to more risks of casualties, groundings, containers overboard. Trade wars have similar effects. We see countries like Canada reorientating their exports away from the US. We see the US TR notice of Mr. Trump against and attacking the Chinese built and operated ships. potential disputes about tariffs. This is not, strictly speaking, a P&I issue, but it may have insurance implications in the future. Whoop. Pollution. So the expansion of the EU emissions trading system and the Fuel EU maritime regulation has raised lots of compliance challenges and triggers disputes regarding reporting requirements, use of fuel, and emissions. This is a very complex regime. The disputes that we have seen so far in the ETS front have to do with charterers' transfer defaults, which means that charterers have failed to transfer certain allowances under the EU ETS because of their reluctance to establish trading accounts or to use custodian brokers to procure payments. For those of you who are not completely familiar with this, the EU allowances are actually climate credits, carbon credits that the ship operators have to surrender by the 30th of April each year. One EU allowance per 1 ton of carbon dioxide equivalent. Last year, I think it was 13,000 ships, according to an article I read recently, that were into this program, and there were 90 million tons of carbon dioxide that were emitted. Yeah, that takes us to the dual fuel situation. The dual fuel vessels usually operate with a choice between very low sulfur fuel oil and LNG. And the problem for the owners is that the charterers usually go for the LNG for economic reasons. So what is happening with a very low sulfur fuel oil stored in the ship's bunker tank for prolonged periods? This has a shelf time of about 6 months, and owners are in most of the times responsible for the fuel deterioration. Most of the contracts of the charter parties provide for that owners must comply with charterers' orders regarding the fuel choice, unless overridden by safety reasons. But what if charterers consistently instruct the vessel to sail on LNG? Is it fair and reasonable for owners to be responsible for the fuel deterioration? So owners try to argue that charterers have a continuing duty to provide on-spec fuel. Charterers say no, our obligation stops on the delivery of the fuel. And the saga continues. So it's really important to have appropriate clause at the charter party to have a clear allocation of the rights and obligations. And then we have off-hires, we have damage to engine, all sorts of things. We briefly touched upon the alternative fuels, my esteemed speakers before me. There are legal and contractual implications depending on the type of fuel used. For example, on the biofuels, it takes more quantity of fuel to achieve the same propulsion compared to fossil fuels. So the charter party performance warranty has to be taken into consideration. On the LNG, we have the issue of bunkering operations, whether this will interfere with the cargo operations. We have different sampling methods. So in the traditional fuel, you take samples from the manifold of the ship. In the LNG, you take samples from the supply manifold. And then we have to consider whether the use of LNG would affect the performance warranties in the charter party. And finally, the methanol. We all know that there are very limited bunkering stations out there, so the prolonged delays and the time lost is an issue, and who is going to bear this cost? And on top of that, methanol, contaminated methanol, can really cause severe damage to the ship's engines. Other risks. Now that the ice starts melting, countries try to retain control over the Arctic waters, which would create more challenges and potential risks for casualties and groundings. We have the cyber risks, which grow by sponsor-stated bad actors. We have climate change risks that result in increased unsafety of certain ports and anchorages. Related to the war risk, we also have the increase in the legal immigration cases, especially in the Mediterranean. To sum up, I don't want to be taking much of your time. The key factors likely to impact shipping disputes in the future: geopolitical instability, we already touched upon that; decarbonization, environmental regulations; technological advancements which offer solutions in efficiency and safety, but also introduce new avenues for disputes. Think about cybercrimes, think about the use of AI in freight auditing, think about blockchain technologies, and also autonomous ships, which is a big thing, a big issue. Supply chain disruptions and market volatility. I mean, recent events like the COVID-19 has exposed the supply chain fragility. So we will see more and more disputes regarding disruptions, delays, port congestions, labor strikes, performance of contracts. And finally, we have the changes in international maritime codes like the IMSBC and the IMDG, the Dangerous Goods Code, which is likely to introduce more disputes around compliance and interpretation. In summary, and that was the end of it, the years to come are likely to present a very challenging environment for shipping and related disputes. This is probably the end of the world as we know it, and what sort of insurance repercussions this new era may entail, it remains to be seen. Thank you for your attention.
Mr. Konstantinos Samaritsis, thank you, Konstantinos, for your...
Ευχαριστώ πολύ.
Ευχαριστώ.
Thank you very much.
For your very informative presentation. Does any of you have any questions to what Kay was talking about? I see so to say, an co-national comrade from Greece. You had a wonderful presentation as well, Nicholas Karalambos. Let me pass you the microphone and...
Thank you very much for the presentation, Konstantinos. It was very excellent and informative. I have just a question with regards to the electrical vehicles. As P&I clubs, you are considering high risks for carriage of these vehicles. Does it mean actually that you are imposing, let's say, more premiums to the carriers of electric vehicles? And how do you compare with other MDG code, let's say, relevant goods?
Thank you very much for your question. This is more of a business assessment, risk assessment, and an underwriter's job to assess the risk.
Thank you.
It's down to the individual clubs to decide whether they wish to take this type of risks and insure ro-ro passengers and car carriers. I think the future will bring some developments there, but it's not an issue of me or anyone else to decide that. It's a decision-making process that has to do with the underwriting teams of the clubs and the business choices they make. For example, there are certain clubs out there, including Britannia, that we avoid insuring cruise ships because we are reluctant to take on ships. Risks arising out of these ships and routes. Is this answering your question?
If I may chip in a little bit as an insurance broker, a broker's task is to know who to speak with. If a question like this arises, you know that you have to call the underwriter. He's the one who's going to assess the risk and take a decision whether the risk is viable and attractive. And matches the insurer's appetite. It's called an appetite. Ro-ro vessels typically are very unwanted for obvious reasons. It's not so easy to place them. But Kay, being on the claim side, he would be able to then deal with the mess and get his hands dirty if something goes wrong. All right. Does anybody else have all right, you have a question. Simon, yeah, our good friend Simon. Okay.
So very quick. You said it's the end of the world as we know it. If you're looking ahead...
I found it quite catchy.
For 20 years' time, do you envisage that the Chinese will have a much bigger role in third-party insurance, P&I insurance? Because at the moment, it's virtually a European monopoly. Do you expect that to change in the future?
Yeah, the growth of the Chinese economy and the local fleet would not go unnoticed, for sure. No, that if China P&I or similar insurers in China manage to have a key role beyond the Chinese borders, that I don't know. I mean, I would have thought so, though. They can't just left outside. They're expanding internationally. They try to open some branch offices in certain countries. That's what I hear. So they're
I understand their plan is to join the IG in 5 years.
Yeah. This is something I don't know exactly what is happening behind the scenes in detail. I know there have been discussions. I know there are intentions out there. I know it would make sense. Everybody thinks it would make sense for Chinese to have a role in the insurance as they have in the other parts of the industry. But I don't know anything more than that. I'm looking forward to hearing more developments when they arise.
With insurance, it also has a lot to do with reinsurance.
Of course.
So then one of the criterias of the IG, and we had the honor of having the top man of IG. I personally invited Nick Shaw 2 consecutive years in this forum to join with a video presentation. It has a lot to do with reinsurance. If the Chinese can prove that their reinsurance is solid, top-rated, that may be a consideration for a secretariat to then have them join. And then, of course, they'd look at, Francis, am I right about this? Or they'd look probably at history and how has it gone with previous incidents, whether they've diligently paid out claims or whether they dodged the bullet. And if they have a good proven record of being loyal to their members and the renewals have gone smoothly, then I guess. But it's not only a matter of being a strong economy. There's more to that. Anyone else to... Yeah, Lucy, good friend.
Thank you. Well, more of a comment to invite an extra comment, because we've heard Mr. Haralambo in the morning underlining the difference of function and controlled action, something like that. Because the function's there, but the control action may need to change based on the circumstances. What then Konstantinos was referring to new risks. Well, the risks are actually the same. It's the way we execute them that differ based on the new circumstances, something like that. Now, that's just a background comment. We're here for an open dialogue. And in this hall, and it's a rare opportunity to have a P&I club representative and head of claims nonetheless, on our soil. And we also have quite a few people that, know about P&I, but confidence, as Konstantinos said, is probably not that high because we've never seen those people. Maybe they have seen Lucy on the odd occasion. And one of those people is the harbor master, who is in our audience, and shout out to Captain Enchev, who had some years ago invited us to a tabletop exercise on the response action plan, and we forever pray it never happens. But if it happens, and I'm trying to promote here that idea, that the P&I clubs are not just the very big pockets, as you said, fat pockets or something like that. But they are treasure troves of information.
We are the fat pockets for the claimants.
Yeah.
But for our own members, we work together. We are business partners. We are here to provide advice, to guide them. And we are 24/7 available to receive calls and discuss. And that's what we do.
And
So,
maybe also, pardon the interruption, but maybe also help with, as an immediate response to claimants, theoretically a claimant. The Port of Arnhem can be a claimant if there is a very big pollution, but in the aftermath, before the expenses have been collected, before any estimates could be done as to how much is this going to cost, the clubs have the experience, together with ITOP, for example, to give the know-how, to help, to actually help, not just pay.
we definitely have the know-how and the expertise. Depending on the jurisdiction and the country that we need to deal with, we see more cooperation or less cooperation, or countries that they know everything, they think they know everything, and they try to leave us outside. We see countries that know nothing and just give us a blank check, deal with it. You have the expertise, we don't know anything about it, and take the responsibility. And sometimes we find the difficulty to try to make them understand we are not here to undermine your work, but to help you, because we know we have seen hundreds of these cases. You have seen 3 or 4 in this particular port, but we have seen hundreds worldwide. We know the expertise, we have the connections, we have the network, we are here to assist. This goes for the terminals, this goes for our members, this goes for all the stakeholders.
Captain and Chief, that was the point I was trying to make, and Konstantinos did it much better than me.
Shall
Thank
we
you.
organize a separate P&I club chit-chat somewhere, like a virtual online group? It is a partnership, really. Having a club behind on a shore, it's a partnership. It's not just about the money transactions and the recoverabilities. Isn't that so? You have a team of lawyers, you have solicitors, barristers often, and the clubs support a worldwide network of dedicated P&I correspondents. So if you have a problem in Novorossiysk or in Africa or in Finland or New Zealand, within minutes or hours, depending on the time zone, you can get a dedicated person, be it technical or legal, just to act on behalf.
We also have the loss prevention department. You have the technical people, and we have the database. We have the information. We have the history, statistics. So we can help in many aspects.
Thank you very much, Konstantinos.
Ευχαριστώ πολύ. Thank you very much all.
So again, one of my favorite things, P&I, but I will bore you with my own presentation a little bit later if you have the patience to tolerate the next speakers. Speaking of the next speaker, I'd like to invite here a good friend now, whom I met in Istanbul some 2-3 months ago when we shared a panel. We were both speakers on the panel, and when I had my talk, I was bold enough to call our panel a rock band. And Engin Koçak, who will now join us, is a member of the board of directors of the Turkish Shipbrokers Association. And beside that, he has his own consultancy company dedicated to S&P. So Engin, he'll speak about wars and sanctions. And here, the microphone is yours, please.
Thank you very much. And the pointer? Okay, so I'll just be wandering around all laid out and relaxed because I don't know, jaw-dropping, you told me. Okay, I hope everybody is going to be agreeing to that after the presentation. What I do is, thank you very much. What I do is I'm a ship sale and purchase broker, and I do a little bit of chartering, and in my career I have been doing some market analysis when I was doing the chartering brokerage, and I've been in the business in the industry for 20-something years. What I'm going to provide you with is the perspective of the trading floor here. I mean, the money comes and goes, and its primary impact or the primary impact of sanctions, tariffs, trade wars, etc., to short sea shipping markets. The short sea shipping market is a what I have deep expertise with, if I may say that, because I've been dealing extensively with that for the past 10 years. And Turkish Shipbrokers Association also delivers a report mainly focused on short sea shipping, but also touching like Handys and Supras. But Handys and Supras are a bit more complicated in terms of global tariffs and trade wars. But you can observe the effects of the tariffs, unluckily for us, because of the geopolitical situation in the Black Sea and, let's say, East Mediterranean. You can observe the effects more like in a small sample where the trade is more concentrated. Now, what I'm speaking about short sea markets is this perimeter. Why I refer to it as a very limited but confined but very concentrated trade. This is 1% of the global seas. But 20% of the trade goes here in terms of tonnage. And if in terms of value, you might expect it to be beyond that. Because, of course, the transatlantic trade and trans-Pacific trade is something, but in terms of concentration, this is probably the most valuable seascape that you can imagine. How do we model the trade? How do we quantify the trade? There are several indices. One of them is the Istanbul Freight Index, which I have been running as a manager since 2011. I'm actually not working with this company anymore, but I'm still a major consultancy. I'm providing major consultancy for them, and every week, every report is published after I read and confirm. I also taught the people how to run this, so I can still say I have a say in this. This is okay. This is just like the Baltic Dry Index. It's up and downs. I will come to it, how the sanctions impacted this, but currently we can say that this is currently the Istanbul Freight Index at 700 points. This is translating to more or less for the vessels that are concerned, they are running at costs slightly higher than running costs, slightly higher than the break-even. So currently these vessels, 2,000 to 10,000 deadweight general cargo vessels, are earning slightly more than what the operation costs are. And we will see how the sanctions affect it. And by the way, I should say that when there's a sanction, a trade war, or a commercial restriction, you would expect the freight rates to go down, but that is a bit tricky. I have also found out myself when preparing for this presentation. And this is again Istanbul Freight Index, but this time on daily earnings basis. I will also come to that. Another indication, sorry for the lighting, but maybe for just a split second, if I just turn off the lights. Right? Oh. It is not only the markets that is tricky, ladies and gentlemen. Okay, now you see a little bit better. It's the river sea market indicators, which also we present on weekly basis as Turkish Shipbrokers Association. And also the conventional, by conventional I mean those that are outside the river sea-going markets, the shallow draft markets, the let's say deep sea but small vessels. And then, hold on. And then we have the conventional markets and the U6 index and the Baltic westward. This is concerning the Baltic. The tension with Russia also resulted in some disruptions in this trade as well. I'm going to be covering them as well. So, okay, you can turn the lights on. Welcome back. Now, this is deep sea. As I tell, we are briefly going to touch that, but this is also involving some Chinese sanctions and Chinese trade wars as well. So it's very complicated to measure, quantify the effects. But we will also try to touch on that. So let's do a little bit of a theoretical study here. Just like I'm lecturing you, I apologize, on the economics. You can find this from any, let's say, ChatGPT, etc. So this is major theory. And when there's a sanction, the trade with the sanctioned company, with the other sanctioners, drops heavily, but the sanctioners tend to find other alternatives. Now, this means two things. Okay, trade with the sanctioned entity is going to fall, obvious, but this alternative for shipping means? Does it mean the alternative is going to give you less ton miles, which is the major ton miles, 1 tons of cargo shipped in 1 miles? If it's the alternative is at a longer place and you have to go a longer distance to get the alternative, then it's going to create demand immediately. And if it's shorter, then it's going to go the opposite way. This happened particularly in oil trade. For instance, this happened after the this is around the time the conflict started, and it took a little bit of time and some embargoes to kick in. After this, trade with European Union's trade with Russia immediately declined, and the alternatives immediately went up. This meant also this decline is much bigger than this inclination, but the result on the trade MR tankers and product tankers were immediate and very profound, if you remember. I didn't cover the markets for the tankers, but if there are any chartering brokers or ship owners in the tanker business, they know what I'm talking about. It's only started to mitigate recently. Okay, then for general cargo, we can also say the same thing in a more profound manner. Trade with Russia immediately declined. It took a little bit of time because sanctions kicked in. At first, the steel imports from Russia were not sanctioned, but then sanctions came in, and steel trade is now near zero. I'm also going to cover the commodities aspect briefly, and you'll see more clearly why it went down. So, okay, this is theory. Also, what happened if you speak about the indices that I mentioned? What happened immediately after the sanctions, the conflict started? You see here, this is February 2022. Even before the conflict started, the rates started to go down because people started to feel something. That happens all the time, by the way. In shipping, the market gets the signals and tries to shun away. Then immediately after the conflict started, the freights plummeted, but then this happened. You're going to see why this happened as well, in more detail. This is a zoom in, and this is the daily rate, which actually started at $7,000 to $10,000 per day, dropping to $3,500 to $4,750, almost half, and then recovering it, but not quite making it for the rest of the time. Now, what happened? Hold on. Okay, let me explain here. This happened because everybody was scared, and this happened when people started to say, "Oh, it's not that bad. We can do that." Because the market, some vessels, despite the danger and despite the sanctions and despite all the other distresses involved, started to comply with the trade, mainly go to Ukraine, not Russia, okay, including Russia, but mainly going to Ukraine and asking for the premium of the risk. When they ask for the premium of the risk, when they go in a confined space, freight rates altogether go up because then, okay, you are not going to Ukraine, you're not facing the risk of an attack, you're not facing the risk of somebody dropping a bomb on your ship, but then you're outside the market, but you can also benefit from the increased rate in the region. This happened in the East Mediterranean and Black Sea region. And then sanctions started to kick in, which you have seen in the graph. It took a little bit of time for the sanctions to kick in, and then the freight rates started to come off again. But then it couldn't make it again. But this also coincides with the post-COVID boom. So there was going to be a normalization anyway, but the conflict just made things worse for the economics of shipping. Okay, I'll just get close to the computer because it refuses to detect. Now, this is also an interesting case. The river sea vessels that are only involved in the trade within the Sea of Azov. Immediately after the conflict started, the rates spiked because, once again, same thing happened. Those that could go to trade demanded for the higher rates for the risks they are taking, and then the rest of the rest of the vessels, the rest of the companies, shipping companies, also benefited from this only for the river. Now we have another thing. It's just like a very specialized sort of tariff. Let's say Turkey introduced wheat import ban last year, in June, and only recently lifted the ban. And in that time, at the first time, the freight rates went up because the ban was actually primed for a time. The freight rates went up. This is the effect of a tariff. Before everybody, the tariff was announced and it kicked in and the trade improved because these Turkish tariffs were only focused on the imports, nationalization of the product. So when the tariffs were announced, hoping that it will sometime in the future, the wheat import ban will be lifted, traders imported the products to the bonded stores, not imported them, not nationalized the product. So the trade immediately went up. And then when seeing that it's going to last until the end of the year, trade immediately went down. Similar pattern actually. Once you propose a tariff, once you just imply that there's going to be a trade war coming or there's going to be a sanction, first reaction is a drop. Then some courageous acts come, and then if they say it's going to stay, if they feel it's going to stay, in terms of shipping, I'm speaking in terms of shipping markets. If it's going to stay, which is generally the case, then courageous dissipates. So it's a bit tricky. That goes for conventional trade from Novorossiysk Marmara steel trades and Reni Marmara Ukraine grain trades. Again, despite the conflict, despite the danger, freight rates increased. This is courage against sanctions because it involves Russia. This is courage against being dropped a bomb on your vessel. But then things started to normalize, and it has not gotten like this ever again. And you see the yellow area is again the Turkish grain wheat import, which is had a little bit of impact here. Okay. And this is what happened in Europe, which is particularly focused on the Baltic trade. During the conflict, the U6 index, which involves the European trade, did not change, but Baltic westward fell down immediately because there the sanctions were cut through and the sanctions were serious, and the owners did not want any trouble. Exactly opposite of Black Sea and East Mediterranean. Okay, fine, this is what happened in the shipping markets, but we have to take a look at the commodities for those who are interested. I mentioned about the steel trades. Now here you see, after the European steel imports have been on declining trajectory since some time, but after the last year of sanctions and European steel sanctions, you see how altogether Russian imports have gone to zero by 2023. And even the other Ukrainian and Turkish imports have gone down because Europe has also not only sanctions on steel, but also tariffs on other countries. You see the impact of the commodities. Fertilizers, this is also interesting, but this is also only focusing on Ukraine. Because of the war, Ukrainian imports, urea imports from Russia were strong, but Ukrainian imports have been declining. This is a very serious decline from these levels. And ammonium nitrates from Russia, all somehow stable, but very much bearish in terms of, let's say, very much bearish for Ukraine. This is because of the war, the conflict. And so if there is some peace coming in, then these tonnages will return to the market. Then we are going to speak about a different market, hopefully. Starting from 2024, again, tariffs kicked in for Russian wheat and maize. So until then, the imports, European imports, were somehow resilient. Again, traders are doing their job. I mean, if they can do, and if there's a tariff, there is no tariff or there is no sanction threat, then they will continue to trade. The conflict started around here, but the imports improved. This is wheat plus durum wheat. But then, when the European Union slapped the tariffs, then it went down. Same goes for Russian maize, and this is for Ukraine. Despite the risks, this is actually the alternative effect that I mentioned. First, at the start of the conflict and immediately after the conflict, instead of importing Russian wheat, European Union started to import wheat from Ukraine. You can see the figures here. And in terms of corn, it goes like that as well. And it's on the decline despite the support European Union is giving, but it's seasonal effect. And about the, let's say, a brief touch on the United States and China tension, you can see how the US agri-product and grain port loadings to China has gone to zero after the trade wars and Trump's inauguration. Even before that, there were seasonal peaks. We will see this fall if there's going to be any peak. I'm very curious to see the rest of the graph happening this year. So short sea shipping markets adapt quickly to the sanctions and tariffs. Of course, it's a bit tricky. At first, they are a bit courageous, and then they comply. And first action is always courageous to reap the rewards, and it affects the rest of the market. But later, as more sanctions are slapped and more owners are ruined, market corrects. I think that's it. I hope I didn't bore you to death.
Thank you very much, Engin. Now, would the audience like to ask some questions to Engin related to his presentation and his overview of how the markets have gone? Freight rates, the tendencies, the war impact on how the ships, river or blue water, have moved around. Any chartering brokers? Yeah, that's a good question. Anybody? Here is a Rosen. Ask a clear. All right. There's a
exchange maybe because this is the first analysis announced.
Yeah, okay. That's
yeah. There you go.
that actually is a misconduct on my account. I mean, I spent too much time creating this. Yeah, this is the market. Yeah, I should spend some time marketing it as well. That is what now I'm doing. Yeah, this is the truth, and this is the sad truth about the market. Nobody covers these markets. Not Clarksons, not Braemar, not the big ones. Don't cover. That's your point, right?
All right. Our
Yavor is here.
we will have a coffee and we will patent it and we will sell it across the markets. No worries. I mean, that's what we're here for. But our good friend Simon wants to...
Forgive my ignorance, but to what extent has Turkey signed up to the EU G7 sanctions? Where does Turkey fit when it comes to sanctions?
What in terms of which sanctions, for instance?
Well, trade sanctions against Russia. So
yeah, I mean, I can say it's a bit in the gray area. And you know that.
Your hair is a little gray. Maybe that's where...
Listen, as far as the United Nations sanctions go, Turkey needs to follow that. But European Union sanctions, I mean, Turkey imports a lot of steel already. Turkey imports a lot of coal, and everybody knows that. Even the Turkish banks who are supposed to sanction the coal, when there is a small adjustment in the bills of lading, they tend to ignore that. And everybody knows that. I mean, this is no secret. I'm not telling something secret here. I mean, everybody knows that. I know European-owned Supramaxes calling Iran. Everybody in shipping knows that. I mean, there are ways to circumvent regulations. And the shipping community sees these sanctions, trade wars as glitches to circumvent through?
Yeah, that's a very sensitive topic, isn't it?
Yes. Okay,
We will tackle the topic a little bit as time goes by. I mean, I'll also touch upon a few things there in my presentation, and I want to thank Engin Koçak again for being a wonderful presentator. My name is Yavor Velchev, and I'm a founder of Ship Possible. But my next speaker is called Jim. Are you before? Are you serious? Because on the agenda, you've reversed, and you didn't even let me know. All right. So, being a moderator of this panel, I have the feeling that I'll open a new company for talent scouting. I met Ali in Athens on a conference. I met Engin on a conference in Istanbul. Everywhere I go and deliver a speech, I meet somebody and I sort of attract them for the cause of this forum. Who else? Oh yeah, Guillermo. My next speaker, probably one of my dearest friends here. I mean, he's a wonderful guy, the guy with the red glasses. I co-chaired a conference, online conference it was, for an Ukrainian law firm, wasn't it? And then you spoke about H&M aspects and recoverabilities. I spoke about sanctions and stuff. And I can't wait to invite Guillermo to deliver a talk on a trip to Indonesia. Just for your background, Guillermo is based in Genoa, and one of the probably most loved names in the hull machinery world. Being a hull lawyer, he will walk you through this attractive topic. Grab the microphone and go ahead.
Thank you very much. Thank you, Yavor. Thank you, everybody. And thank you for inviting me the second time in a row to this conference. So I don't think I was that awful last year. Maybe there was no one available. I don't know. In any event, I'm here. I feel the pressure because I know that the only thing we separate you from a coffee is myself and Jim. So how cruel and sadistic you were to put two lawyers in a row before the coffee. Okay. I promise to be as quick and easy as possible. Don't worry. Yavor asked me to talk about real case which I handled in the past. As he said, I mostly deal with highly machinery and war risk cover. And I picked up a war risk case which I handled in the past, which is a little bit dated right now because it is of 2019. But there was a recent Court of Appeal decision in the UK which rang me a bell and make this thing quite actual and contemporary. So before starting, I just want to give you very, very basic concept about hull machinery and war risk, which is important for this presentation. Okay. First of all, everybody I think is aware that any kind of insurance cover only things which might happen, not which will happen for sure. This is what the English calls fortuity. Okay. This is the first thing. Something is going to happen for sure, it will never be covered. The policy will be null and void. And now you'll discover in a minute why I'm telling you that. The second thing is, of course, that the hull machinery and the war risk cover the vessel in itself. We are not like the P&I, so my clients tend to cover the hull. So they are not bothered to some extent to the crew. So they are not the best friends of the crew, let's say, to some extent. We have got a different approach from the P&I. Third thing is war and strikes cover. What is it? Is a cover, of course, as the word says, for vessel during some situation which are war-like situation, rockets, bombs, torpedoes, whatever you can imagine. But there is also a set of insurance danger, which are what they call civil risk, so detention, seizure, arrest. And the peculiar aspect of the war risk is that if the vessel remains stuck or detained for a certain period of time, the assured is able to claim for a total loss, so ask for the whole sum insured. This period of time is usually in the English clause 12 months. Especially in the Italian market, they tend to reduce to 6 months sometimes. But the normal timing is 12 months. So what happened basically is that if a vessel is stuck, detained for 12 months without interruption, the owner can claim for the whole time, for the whole sum insured, if the vessel was lost. Okay. So let's move to the case which I'm discussing today. I didn't get it. I had the pointer. So this was not the case in itself was famous, but I think it was a kind of a peculiar situation which the insurers, and I think the P&I clubs as well, faced in 2019. The vessel which was handling was belonging to the Greek interest, was insured with the Italian market and a war risk normal cover, was in English clauses, and the vessel was intended to enter to Singapore to load some cargo. The port were congested, so the authority from Singapore asked the vessel to move to a waiting area. The master decided to move to a normal waiting area, which was the channel that you see between Indonesia and Singapore. What happened the day after that the vessel anchored? The Indonesian Navy boarded the vessel, detained the vessel, seized the paper, seized the document of the crew, and obliged the vessel to go into an Indonesian port. This was not a single situation, because on that particular period of time, about 20 vessels had the same experience. The alleged breach for the vessel detention was that the vessel, the master, didn't have asked in advance the permission to anchorage in Indonesian waters. Okay, so it was just an exercise of sovereign immunity. The vessel remained stuck there for 6 months. And of course, they claimed the CTL under the policy. So they claimed the total loss under the policy to the insurers. The insurers raised some defenses on that, which oddly enough were more or less all the same defenses which were raised for all the vessels stuck there. But luckily to us, we settled that case. There was only one vessel who didn't settle, is the win-win, where the insurer didn't want to settle this case and continue in their position, saying that the period was not covered. Recently, a Court of Appeal decision came out of that, and I will come to that and explain you on what grounds the owner succeed, because actually the underwriters lost on both, either in commercial court and in appeal. So it was a good choice for us, because it was my case, to settle in advance. But again, all the defenses were absolutely the same in all the other vessels, as far as I know. For sure, our were the same, a win-win case, because their insurers were the same. So we share the defenses, let's say. The first ground upon which the insurer said, we're not going to pay you this loss, was because the master was intentionally wanted to go to anchor in that place. So the underwriter said, it is not a fortuitous event. It's not something which might happen. It really was something done on purpose by the master. So it cannot be covered under the war risk policy. The court, the English court, dig into the cases, look at the very facts of the cases, and just discover that in 2019, Indonesia suddenly changed their attitude. That particular area, despite it was within the Indonesian water, was absolutely tolerated, was a custom place to go to anchorage. But in 2019, the Indonesian Navy changed the attitude and decided that they couldn't anchor there and they need permission. So it was a sudden and unexpected change of the attitude by Indonesian. And this thing persuaded the underwriters to consider it as a fortuitous event. The other exclusion clause, which I didn't mention when I talk about war risk cover, as I told you, all the war risk scenario, as I said, rocket bombs, torpedoes, whatever you can imagine. Also the detention. Detention is covered any kind of detention is covered, but for some situation. One of the situations which is not covered is whenever the owners incur in a breach of custom or trading regulations. That means basically that if the owners make something, a breach regarding these two fields, will lead the vessel to be detained, the cover will not operate. In this situation, the underwriter said, okay, the reason for your detention was because you anchored in a situation, in a position where you were supposed to ask in advance for permission. You didn't. So it was a breach of the regulation, of the Indonesian regulation. So it was a breach of custom and trade regulation. So I will not cover it. Also on this side, the court decided and said, no, this is an exclusion. Like all the exclusion in all the policies, must be construed and interpreted narrowly. And the meaning of custom and trade regulation means that is something which must concern the cargo and the health and the quarantine situation of the cargo, not a breach of a sovereign immunity regulation. So they also lost on this side. What are the takeaways? And already reached the end, don't worry. What are the takeaways? The takeaways, of course, you can see on the slide all the takeaways, but I think the most important one is then once you've got this detention situation, the most important thing is to understand the reason why the vessel is being detained. There are some situations, some area, which I think, I'm not sure whether the last year I talked about Iran or I think by Iran, because we had also some vessel in Iran where P&I are not providing any support when the vessel is in Iran because of the sanction, of course, and underwriters neither as well. But usually the most important thing when you've got this kind of detention is to obtain local advice, because whether this is covered or not is something which relates with the very cause of the detention. The very cause of the detention can be only understood if you get local advice and you fully understand the picture, not only the breach in itself, but also the picture in which situation developed. In the situation of Indonesia, the reason why Win-Win were the only one who didn't pay, were not lifted the arrest, because they refused to pay what they call a fine to the Indonesian Navy, and all the other 20 vessels paid. I can easily say it was a bribery because it's the same word they use in the Court of Appeal decision. But that's the reason why. And these people, maybe the owners, had an interest for a CTL rather than having the vessel retrain, of course, but to retrieve. But that's a different story. And the sad thing about that, which of course is not of my concern or my client concern, because we don't cover crew, is that the crew remained there for about a year. After that, the master was sentenced to 6 months, I think, and the fine was issued. Well, fine was not that bad. I think it was 7,000, which of course maybe was paid by the club. I don't know. But everything was done, and I'm unrealistic on that, was done on the back of the crew, which remained there for 1 year and a half. And the master stayed in a prison, Indonesian prison, which might be a fancy place, for 6 months. So that's it. I haven't got more to say. I hope it will be quick and easy. And I leave the floor to Jim, which I understand will talk about crew.
Just before we move on to Jim, you touched on a little bit on the crew's well-being. And I'm very sympathetic to this. This is probably going to be my next year topic, because I can't help but raising a hand in support of distressed crew. And the clubs, indeed, when they issue when a P&I policy is issued, there two of the accompanying certificates are called MLC, the Maritime Labor Convention. And this is the way a club supports distressed crew in very dire situations. And the club would seek to at least ensure that a crew member in poor conditions would get food and basic clothing and some money to spend. But speaking about the crew being locked in for a year and over a year is an awful thing. And we almost were we're going to be fortunate to have David Hammond, who is the founder of the Human Rights at Sea organization, something impressive. And I met David in Geneva maybe 17 years ago, and he almost made it to Varna. We'll try next year, and if you happen to be here, he would speak a lot about crew and well-being. But coming back to Guillermo, this was an extremely interesting one and a very vivid example of how, first of all, a ship can be seen as CTL or not, and what insurers' defenses really are. And the defenses are exclusions in the policy, and you know very well in the hull policy and the P&I policy there are defenses. Anybody having a question to Guillermo about what he went over? About the situation? There's a raising hand. Or Andrew Roberts, right ship.
Hi, thanks very much. A very informative presentation. I suppose really my question is one of intrigue. You know, we heard this morning from Simon about the IMO as a global regulator, and here you see what I'm assuming is an IMO state taking a very extortive approach over operators. So I think it's a bit of a rhetorical question to ask amongst the audience, but you know, where's the IMO's role in this, in actually calling these things out in that arena? And, you know, saying that, you know, this is just poor form. Because, you know, if you take an Indonesian ship coming into another jurisdiction and the same things happened, you know, it would be completely disruptive to international trade. So yeah, my question is, you know, does the IMO have a role in bringing these things to the fore and trying to eradicate such extortive practices?
Thank you very much for the question. It's a very good question, actually. I didn't go into the details of this case because, of course, as you can imagine, it was a quite complicated case. There was our exclusion coming into place, and I didn't want to bother you. Of course, being a general situation in terms that it affected about 20-something vessels all in the same period, there was a big fuss in either the P&I, in the shipping community. But what was found out, and that's the end of the story, I must say, is that Indonesia was exercising her sovereignty power and nobody could blame her because it was something which was legal from a point of view in terms of their law says that if you have to anchor there, you have to ask for previous permission. They tolerated up to that time, but that time they changed their mind. They just decided to apply strictly law. So the UN clause convention couldn't help because it doesn't operate when the vessel is anchored. You can pass, of course, but you cannot anchor. So what I will not bother you with the decision of the Court of Appeal, but in the Court of Appeal decision is plainly written that Indonesian was exercising his power and they couldn't be blamed for that. There was some, I know by my P&I friends, I cannot recollect if Britannia was involved, maybe another one, I'm not sure, at least in my vessel. I understand there was high-level discussions, but it didn't change the whole story. All this vessel had to pay something to get out of that. And the only one who decided to refuse to pay was Win-Win. And Win-Win stayed there for 1 year and a half. So I don't know really what to answer. What was the IMO role? Pretty much no. Yeah, sure.
All right, wow. Simon, you're...
An expert on these things, but actually I know that this whole issue of detention of crews for alleged criminal offences or whatever it might be, the new IMO Secretary General is very passionate about this, and so it's on the agenda of the IMO Legal Committee, and I believe there's a joint working group with the International Labour Organization. So I don't know the specifics of this case, but it's not a case of the sovereign rights of the coastal state. It's that there's other principles involved. So I mean, more often the problem we increasingly have at the moment is with drugs cases where the master does the right thing and just simply informs the authority that drugs have been found on the ship, and then he finds himself locked in some horrible South American prison. So So it is on the agenda of the IMO and the ILO, but it's a complex one.
Very rightly said. So ILO, yeah, ILO.
Okay. Yeah, thank you very much.
All right, give it up for Guillermo. And you also mentioned bribery, and that's totally in contradiction with the UK Bribery Act. But I started to say, my name is Javor Velchev, and I am a founder of Ship Possible. And my next speaker is called Jim. He's already with us. But his family name is Cashman. And if I were to change my family name, I would choose that family name. I'd choose your family name. It's a very fancy one. Can I say a couple of words about you before you start? Yeah, let me. I was a young boy when I spent some time at one of the most prominent law firms in London, Holman Fenwick Willan. And Jim has a lot of history with Holman's, and now he's acting as a consultant for another outfit called Preston Turnbull. Jim is also a Admiralty solicitor. Does any one of you know the difference between a wet lawyer and a dry lawyer? Does that ring a bell in the maritime world? Not too many people. Well, I know a friend who knows, but it doesn't sound too pretty. But wet lawyers would be the ones handling collisions and Admiralty cases, whereas dry lawyers would be the ones handling charter party disputes, pretty much, simply put. Jim Cashman, Admiralty solicitor, wet lawyer. The floor is yours. Please go ahead with a win-win presentation.
Well, thank you. Actually, it's a lose-lose presentation. Just look, before I'll be very quick, because obviously you're all bored senseless after our four brilliant speakers that have preceded me. But who amongst you had heard of the plight of the captain of the Win-Win before today? Absolutely nobody. So for all that the IMO are doing, apparently the message isn't getting through. And I say that quite passionately as a member of a seafarers charity. And also with my own experience of a case down in Southeast Asia not that long ago, where a crew were detained for a year, that most of them were released after about 6 months, but the ship sank. The captain joined the ship a week before the ship sank, and yet he was detained for a year. It's a serious problem, and it won't come as a great deal of comfort to the seafarers amongst you that not a single person in this audience had ever heard of the plight of the captain of the Win-Win. Probably you hadn't even heard of the plight of the ship that I was dealing with down in Asia either. But look, let me just make sure I've got the technology. I'll be very, very brief. So brief, in fact. How do I operate it? Okay. So, look, I'm going to talk about three things, but I will talk about them briefly. In the Win-Win situation, the problem was that it was crew negligence, effectively, that brought the ship into Indonesian waters. And what I'm going to talk about very briefly is the consequences if it was GPS spoofing that caused the ship, or was a cause of the ship going into Indonesian waters. I'm then going to talk briefly about GPS spoofing and unseaworthiness. And the reason I'm doing that is because I got phoned by a client, a charterer's entry at a P&I club about 3 months ago, who said, Jim, this ship is refusing to sail from, it was in Iraq, I think. It's refusing to sail from Iraq because they say there's a lot of GPS spoofing going on in the Persian Gulf, and we won't be able to navigate our way out of the Persian Gulf. Can they refuse to sail? Well, the answer is they can refuse to sail. The bigger question is, would that be a breach of the contract of carriage? And so I'll look briefly at that. I don't know the answer to it, but I suspect it's something that is going to come up, and I'll talk very, very briefly about it. And then the third thing I'm going to talk about is GPS spoofing and criminalization of seafarers. I always like to stick a bit of Shakespeare in my presentations, and I make no apology for it because it's the most wonderful English. And what I could have done here is, people have to take their opportunities when they come, and that's what this speech is all about. It's actually by Brutus in the play of Julius Caesar. It didn't actually end very well for Brutus. I don't know how many of you know the story, but there's a great interplay between the options that the human being is taking, Brutus in this case, and the tendency of fate to interfere in all of our plans. But had I started this with the wording of an exclusion clause, the cyber exclusion clause in both Hull and war risk policies, it would have bored you to death. It's really not good English, and that's why I've stuck that up there just for you to enjoy and to savour. But what do underwriters do when a new risk comes along? Well, eventually it might take a bit longer in the case of the P&I market, but for sure what they're going to do is end up one way or another charging more money. And the way it's done in the Hull market is that they exclude the particular risk. I mean, traditionally, Hull risk has covered things like restraint of princes. That's the prosaic language that we're stuck with from the 18th and 19th century. Restraint of princes was the risk that was caused the loss in the win-win situation. But of course, perils of the sea more generally, fire and ships sinking. But along comes this possibility that all of this technology and these wonderful toys that we're creating are going to cause more and more ways in which the underwriters might face some sort of liability. And so there's the opportunity that the underwriters have taken, referred to in that opening lines of that speech. The fortune that Shakespeare is talking to, the way that the underwriters achieve their fortune, they might object to me calling it a fortune, but they don't do badly out of war. And they don't do badly out of cyber, actually, because what they do is they say, well, if the cause of the grounding, for example, not the grounding, sorry, just, okay, in the case of the Win-Win, entering into the territorial waters of Indonesia, if you entered into those territorial waters because of a cyber risk, because of spoofing, GPS spoofing, and the spoofing was done with malice, then we won't cover any loss that flows from that. And that applies to both Hull policies and to war risk policies. And so the answer in this case is that if the cause of the Win-Win going into Indonesian waters was not the master being slightly negligent in the navigation of his vessel, but rather because there was GPS spoofing and he was misled into going into the wrong waters, then these owners would not have had cover for the losses that flowed from it. There's a way out of it, and we'll talk about that a bit later on, only in about 5 minutes, where I'll talk about the solutions to the problems. And then the next thing I wanted to talk about. Okay. Sorry, come back one. Yeah. So this is then addresses the question of is it, have I exercised it's an obligation of a ship owner to exercise due diligence to make his ship seaworthy at the commencement of a voyage. He never guarantees that he's going to reach his destination with his cargo. The ship owner and those who insure the ship owner are not cargo underwriters. Cargoes have to get their own insurance. He's not promising that this ship is going to reach its destination with its cargo on board. But he is under obligation to exercise due diligence at the commencement of the voyage to make the ship seaworthy. And so what is the answer to the question of somebody, a captain, refusing to sail from Iraq, for example, because there is GPS spoofing in the Persian Gulf? Well, I think the answer is probably that the owner will lose that. That's my own personal view on it. And I think he'll lose it for this reason. I can imagine counsel for the charterers standing up in court and saying, "My lord, I have before me a copy of the Financial Times, dated the 2nd of September 2025, which was the day that the vessel refused to sail from Iraq. And it turns out that over Bulgaria, there was some GPS spoofing on an aeroplane, and yet the aeroplane still managed to land using what they refer to in the aviation industry as visual flight regulations. And I understand that ships navigate in a very similar manner. And so I put it to you, my lord, that these owners should have sailed the ship. And then the counsel for the owners will turn around and say, yes, my lord, but that aeroplane had already taken off, and obviously it had to land, whereas we haven't sailed yet, and in order to be safe, we're refusing to sail. And counsel for the charterers will turn around and say, my lord, they only have to exercise due diligence to make their ship seaworthy, not to promise that it will reach its destination. And I put it to you that they should order paper charts. They should go back to first principles. No navigator should ever rely on one form of navigation alone, GPS, which has become the absolute norm. And so therefore they should say, look, I don't know the answer to this question, and it may come out, but it will arise out of a dispute about whether a ship should have sailed or not. And the losses that will be claimed will be the loss of use for the period that the ship remained in port. I don't know the answer to the question, but I would imagine that the owners will actually lose that one. Because I can order a chart sitting in my desk in London and it will arrive the next day. Even if the aeroplane on which it's being couriered down to me suffers a GPS spoofing incident, it will still arrive on my desk. No, from chart suppliers. From chart suppliers, yeah. Thank you. Criminalization of seafarers. Well, if I would imagine that even if the win-win entered into the waters of Indonesia because of GPS spoofing, not from the government, but from some other source, I think the result would have been exactly the same. I think the captain would have been detained. It's what people do nowadays. It's what people do nowadays. I think the captain still would have been detained. I think he still would have ended up spending 12 months in jail. And I think, in actual fact, he was fined $7,000. You only need to look at the Eagle S, where the crew there, or the one who remain, they're not in prison, as I understand it, but they're not allowed to leave Finland. But they are being blamed for the incident that took place. That's the anchor dragging. Now, I know, because I've dealt with lots of marine casualties, that anchors do sometimes slip out of the hawse-pipe when a ship is underway, and they drag and they pick up whatever is underneath them. And I have no doubt that the two Georgian and the one Indian second mate who were being detained there didn't break those 4 cables on purpose. That's my own view on it. We'll have to wait and see. And a really interesting development in that case was that there was no VDR recording of the event. Not that the court needed it, because there was plenty of AIS evidence, but there was no VDR recording, and that was considered to be suspicious. And it transpired that what had happened is that there was a break in the timing signal coming from a satellite. And that was what caused it was an old-fashioned VDR to switch off. So I think people jump to conclusions very quickly about these things, but you know, I don't think we should put as much faith in technology as some people, as the technologists would like us to put in it. And seafarers, at the end of the day, they're very much at the front line. And if something goes wrong, when there's blood on the deck, when there's oil in the water, it's the seafarers amongst you who will be the first in line of fire. And you'll probably be in some strange foreign jurisdiction. And a lot of the time you're going to be on your own. It's just an unfortunate reality. And I'm very conscious that lots of seafaring unions try to speak to their governments, to the ILO, to IMO. They try to get their message across. But the bottom line is that, if you listen to a forum like this and you hear words, I wrote them down, next generation, innovation and progress. There's one thing that hasn't progressed, and it's human nature. Human nature hasn't progressed since the book of Leviticus was written, probably about 4,000 or 5,000 years ago. You'll all know the story. It's the scapegoat's story, where the Israelites put their hand on the goat, tell out all their sins and then send that goat into the wilderness where it dies, and there go their sins die as well, and the guilt with it. That's where scapegoat comes from. But we haven't innovated as a species, and so when something goes wrong, you guys, you seafarers, are going to be at you're going to be at the front line of that firing squad, and it's going to be very difficult for you to face. And hopefully we can do something about that through the IMO, through the International Labour. I phoned the International Labour Organization when I was dealing with the case down in Southeast Asia, and I told them what was going on and could they help, and their answer was they're not allowed to do that. Yet they are allowed to do it, actually. It's their country. And the rule of law goes out of the window. If a local politician is sitting in a situation where a ship has just sunk and there's oil all over the place and there's blood on deck and some locals have been killed, they'll do whatever they like. What are the answers? What are the solutions? The solutions to the first problem is that you, very intriguing, our underwriting community has issued a cyber buyback. So I'm going to exclude it here, but now you can buy it back here for $10,000 for a year for each ship. Isn't that ingenious? There's the fortune that they took. The problem, the second problem, from the ship owner's perspective, is never lose sight of first principles. I was at sea for about 15 years. I was a captain for about 5 years, but it was before any of these box of tricks that people now have, and they become completely distracted by. I never had them, and I'm rather grateful that I didn't. But I understand that even with an ECTIS, you can still take a bearing, you can still go out onto the bridge wing, take a bearing, and you can still plot that bearing, even if you have no paper charts and you've only got electronic charts. You can still parallel index. These are powerful tools, and you should never lose sight of them. And the answer for the seafarers amongst you is to use those two things, because I've investigated I've been investigating major casualties for about 30 years. And almost without fail, certainly in every single collision case I have dealt with, one of the main problems is people not looking out the window. And ship owners will come up, and IT companies and technology companies will come up with lots of fancy new boxes of tricks and toys to stick on the bridges of your ships with flashing lights and alarms everywhere. In fact, so many alarms you'll probably cancel most of them, and who can blame you for doing so? But the most important piece of technology on the bridge of your ship is the bridge front window. It's enormous. Look out of it, and that is the way that you will avoid ending up in a witness box in Indonesia. Thank you.
I must say, my heart goes out to Jim. I mean, this was probably the most soulful presentation I heard so far, and I really want to thank you for this. And again, putting an emphasis on crew, which touches me. Buyback, you raised an interesting one. In the P&I world, there's buyback as well. Chartered war risks were excluded at some point. I think a year and a half ago, maybe up to 2 years. And then some clubs came up with buyback options. So if you're a charterer, you want to cross a high-risk area, the club would say to you, well, we can buy reinsurance from the reinsurance market against the buyback premium. It's a sort of an AP, additional premium, similar scheme. But anyway, there are 3 more presentations on our list, the last of which is mine. We have 2 other speakers. We'll take a short break for everybody to catch a breath, and we'll be seeing you back here in a few minutes, okay? All right. I'd like to thank the last standing Mohicans for returning to the hall, really. Bravo to you for the stamina, because it's been a day. But the day is moving towards its end. And we will have 3 more lectures. Thanks again for being here. And next speaker is Preslav Rajkov from Aline Shipping. I pass the microphone to him. He'll speak about trading from a commercial perspective.
Thank you, Avor. Hello, everyone. to the ones who stayed. Thank you. Thank you very much for the organization of this event, to putting the place of Bulgaria on the global shipping map where it belongs for a very, very long time. And thanks also to the Naval Academy, because this academy continues to prepare the level of people going into the international maritime, which are well recognized in the whole worldwide. And I feel I'll tell you a story regarding shipping, maritime, and Varna, because I really love Varna, and I would welcome all the guests which are visiting Varna, which is one very, very how to say, lovely city, and you fell in love with. This is the case with me. I fell in love before 10 years. I almost marry a girl from Varna. I'll tell you why almost, and not certain. Because her father was a captain. He was a master. I will not mention names. And back then, I didn't knew anything about shipping, maritime, absolutely nothing. I was spending my time, a lot of my time here. And he was, he's a captain. He's a quite demanding person. He likes to speak loudly, clearly, give orders. He sent me not for groceries, but for provisions. And one day, we were traveling with the car, and I was driving just over here, the sports hall. And I said, okay, where we drive? And he said, starboard. And I said, and he said, you're not marrying my daughter. So this is the story how I didn't end up married in Varna. My wife now, which I'm happily married, her father works in a nuclear power plant. A step more complicated. Hello everyone, I'm Preslav Rajkov from Elin Marine. And today I would like not to present, mostly to discuss with you, to trigger some discussion, to trigger even some arguing, fighting, maybe into opinions. Thanks very much for all of the lecturers before me. Very interesting, very insightful from the world of shipping and maritime. I would speak more about those screens there because I stayed mostly behind them. As you know, shortly on Elin. Elin is a ship-owning company in the Supramax segment. It's also a ship management company, handling all of the operations and so on and so forth, for which you can for sure check me after the event and to exchange more information. A bit about me, I'm coming from the trading background mainly. I'm a trader. I was with the shipping. I told you, when he told me starboard and I turned left. This was my understanding, but I spent 13 years into the trading industry in the physical commodities, different commodities. Cocoa from Africa, energy products, both liquid and dry energy, grains, a lot of grains and oilseed. I was trading. I work for one of the multinationals, not only for one, for several of them. And from one point, let's say 2 years, we partner and joined forces with Elin to establish our proprietary trading opportunities, let's say, in order to benefit mostly the freight and especially the bulk capacities which the company holds. So let's see what I wanted to discuss with you. I told you I want to discuss with you. First, the global trade landscape, and I think a lot of the presenters before me already touched among this very, very important topic which all of us suffered, and I'm telling suffered, because it was a pure suffer in the last 18 months, I would say, on the trading landscape. How the major books, and I will not fall into very, very details. You have all the details, every one of us having all of these reports. We have Bloomberg, we have Platts, we have Argus. We can read a lot. I will tell you my perception and my reality, which I'm facing on those. And the trade dynamics, how all of this trading policy, tariffs, geopolitics, wars are changing, and where some frontiers are opening, and you need to be very, very fast, and in sometimes a lot of risk taking is needed to enter in those frontiers. And for sure, what we do, I will share you 3 cases where we play out all of these 3, because there is a very popular saying in the trading industry and in the analyst industry, and it's saying like this. It's a little bit brutal, but they said, I want a one-handed analyst. So he cannot say on the other hand, because it's always on the other hand. So let's continue. The global trade landscape. This guy, Mr. Donald, is Olympic champion in volatility. And for sure, everyone here agrees. Volatility on all sides. Tariffs on the US steel, aluminum, the crazy regulation about the US shipping and the banning of and the fight with the Chinese shipping industry, because this is not a fight only on the tariffs. It's a pure full-scale fight between Chinese shipping industry and rest of the world. And just the US was bold enough to start this big fight, this big argue, which in the last 2 months, for those of you who are checking the Platts publications and everything, you see how it affected the shipping rates in the area there. A lot of traders were left with deals which were defaulted, washouts, circumventions of those trades because of Mr. Trump. On the volatility front, I suffered, and would say we suffered a lot, because when you have this proprietary trading combined with the shipping, you need to be covered. You need to be hedged on some markets. If I'm buying iron ore, I'm hedging this position. I'm having a contract with a counterparty in China, which is most probably a steel mill or a big conglomerate like C&D Logistics or the likes of C&D. And all of this volatility, for me, to be honest, totally killed me. Normally, traders like volatility, but I think it totally killed the incentive to act, to have some prediction what is going to happen in the next months. In the morning, we spoke that a lot of the new builds, a lot of the trading portfolio on the S&P book in the shipping was affected by this uncertainty, because it was uncertainty. We didn't know. He was playing out 1 week this way, other week totally opposite, which caused uncertainty, which caused delayed investment decisions. And a lot of investment decisions were delayed. So I believe the topic of the geopolitics, it's staying Mr. Trump for sure, and will be staying at least in the next year till his administration is playing the very long game, which we can for sure discuss it's a very, very big topic to discuss and to argue, or to try to change my mind on my position on the US policy and acting. For sure, this guy will be staying on top of the geopolitics map. So on the major books, we spoke about a lot on the decarbonization, everything, all of the efforts which politics, institutions, global organizations are doing. I will touch base this on maybe on the next slide. I just wanted to ask you a question. How many of you believe in globalization? It's not a lot of people. I'm a very, firm supporter of the globalization, and I think the globalization brings us at the current moment of the history in mankind, of trading, of shipping for sure. And I think globalization, despite the last 5 years of speaking against globalization, all of this localization, nearshoring, friendshoring, whatever shoring, it's one big deception, and the world will be very, very soon again on the path of heavy extending globalization. Here we just can take a glimpse on the dry bulk flows. I focus on dry bulk because Eline is focused on the dry bulk at the moment. We are reaching 5.6 billion metric tons of cargo transported for the first time history in 2024. So the levels of trading worldwide, it's not decreasing. It is going, it's only going up, and I believe it will go a lot more uptick from these levels. Again, 154,000 individual laden legs were carried by the dry bulkers, involving this number of vessel fleet. Why I put it this? Just to give you the perception that global trading, it's ever increasing, and shipping industry in the global trading, it's absolutely a thing which cannot be separated. Yes, we can automate the ships. Yes, we can do AI. Yes, we can do satellite, whatever. But the fact that coals from Colombia will need to end in Pakistan, or from South Africa will need to end in Europe, it's unchangeable. And there is no perception or trend that is saying that these flows will decrease in the nearby futures. And saying this and relating to all of this that we speak on the net zero, on the green policies, which are absolutely, how to say, wonderful in some areas of the market and some operations. The reality shown from the slide was missing up there on the coals. I just put it a figure on the coals. Maybe on the PC it's visible. It's the same. I don't know why. Did you? Maybe because. Yeah. It's my miss. But yes, on the coal, we see an all-time high trading in the coal. You remember after COVID, there was a huge uptick on the pricing of the coal. Global economy continues to be powered by fossil fuels. More than 85% is generated crude oil, gas, and coal. Those three are hand-to-hand with the shipping. There is no other option. You cannot carry it out by any other mean. So the volumes in the dry bulk industry, personally for me, will only increase from here. Coal trading, giving example on the coal trading, because we are having some deals on the coal. Coal trading, it's increasing with the highest rate of increase since 2022. Now it's 2000 almost. We are getting to the end, I would say, of 2025. The percentage of increase of production, of demand, and the volumes traded seaborne are only increasing. Relating to the global geopolitics, let's say, how a trader is reacting on this. Just giving you an example, just before 3 weeks, the US passed, it's called the Great Big Bill Act, which is supporting coal exporters out of US. It's giving them a boost, a tax cut from their production costs, 2.5%. So the US can export more and more coals. This relating to the shipper market immediately correlated, let's say, on the shipping market and on the trade dynamics, let's say in Colombia, which is very close by. It's a main exporters of coal. Immediately, it affected the shipping rates because a lot of the traders were dropping their cargoes because the US cargo was way more competitive. Trafigura dropped 3 cargoes from Colombia. Actually, Trafigura is exiting Colombia at the moment because of these trade dynamics. And this all affects shipping and the routing of the ships. You know best, your maritime people. You know best how it's affecting the trade flows of the ships. So the other major block I would like to discuss, in which we are having also projects and trading, is the iron ore. And again, 2024 was a record year of the demand. The steel mills in China were very, very hungry, despite all of the problems in the retail sector there, despite all of the headwinds of trade tariffs between Trump and Xi Jinping. Despite all of that, they are in search of more and more and more iron ore. Recently, Australia made the biggest discovery of iron ore, which most probably will balance a bit the markets, and the market will become way more oversupplied of iron ore, which will affect the prices. And the other thing, which is a very famous topic, one of my favorite, because I'll spend a long years trading grains, is the grain industry, which undoubtedly the conflict in Ukraine and the war is affecting those markets. I really hope this horrible thing to stop as soon as possible, because it's absolutely it's a human tragedy. And the grain market, and one of our colleagues spoke about the Black Sea market here, which is very, very affected by this conflict, these flows, these circumventions of sanctions, of shallow fleets, of traders moving grain in the Black Sea. It's very, very affected. I strongly believe that the activity of trading in the Black Sea will only increase from the current stages, and more of the multinationals are going back into Ukraine. They're rebuilding their origination teams. So I really expect that the Black Sea region, which Bulgaria is also part of, will increase in volumes of grain trading. Firstly, because Africa is hungry. And if we calculate, because Bulgaria is one of the big grain exporters, we have this year 7 million tons of wheat harvest, and we consume around 1, so we have around 6.5 for export. And Africa is really close. A lot of capital, a lot of interest is coming from the Middle East to the Balkan region. A lot of big groups, if you follow closely, are investing in Bulgaria, especially in Romania. Romania is booming. A lot of big funds, and I'm telling big funds because they enter with 100+ millions investments in grain hubs, in grain terminals, in origination teams, are entering the region. Chinese are also entering. I don't know how much of you know that the Chinese conglomerate of C&D Logistics, which is the biggest Chinese commodity group, is opening its Balkan hub for grain origination and sourcing. It will be CVB, Constanța, Varna and Burgas, offices, silo structures, for originating grains for the Chinese feed industry and so on. So grains is also one of the flows which is unstoppable. We cannot stop it. We cannot nearshore it. We cannot friendshore it. The soy in Brazil and Argentina is irreplaceable. You cannot grow it anywhere else. And this flow needs to be shipped. Those ships will be managed by all of you and us. here. And my personal belief in the net zero is that we should strive for the ultimate efficiency. There was a very good presentation in the morning for the composite propellers. This is the sustainability I believe in. I don't believe in the forced capital allocation somewhere where the capital does not find the logic. It only finds the political push. Stay here, stay here. It said, okay, buddy, let's check the return on investment. Let's check on this, on that, on that. The things like which are ultimately giving real efficiency are the pathway to the real sustainability. Also, the Cargill case with the wind-propelled system, this is the real case of the sustainability. It's not written in some documents and papers. It's a real thing which saves fuel, makes more money, and subsequently it's way more substantial than just telling you decrease your emissions, cut your actions or whatever. So I think the technical way forward for the net zero will be passing through those related, inventions, technological advancement, and so on. So let's conclude on the major books. The world is continuing its ever-increasing volumes in the trading. Geopolitics is creating a lot of disruptions and a lot of spots to sleep in. And I'll give you a few examples. I don't want to take too much time. I would like to discuss more with you on your view on this, what we discussed. So, the trade dynamics. All of this is creating shifts, giving direct examples with direct deals. Trump is imposing on China aluminum tariffs. Chinese smelters of aluminum, because aluminum is produced from bauxite, it's triple stage product. Bauxite is the ore which you take from the ground. Alumina, it's aluminum oxide, which is a white powder, and then this turns into aluminum metal. The Chinese smelters are starting very rapidly to search for diversification out of Australia and Guinea in Africa, because those are the two sources. And they say, okay, what happened if one of them said, okay, we cancel to China or we decrease? Guinea do this. Saudi Aluminum Corporation was banned. There was, I think, Capesize staying there 4 months because there was a big fight between government and the Saudi Aluminum Corporation. The Chinese rushed to find bauxite. Where they go? They go to Turkey. If you follow the last 5 years, all of the volumes of Turkish bauxite developed by the Turkish miners goes to China, and it goes to one group. And I work also with this group. He's buying every single stone of bauxite with Supramaxes, which is not normal for the bauxite. It does not calculate. If you don't load a Capesize from Australia with bauxite, you don't have pretty much too much trading margins. But the Chinese said, okay, let's try Supramaxes from Turkey because we need options. What they do also, they go to Pakistan. Normally, they don't like Pakistan. We've done the first shipment of bulk bauxite from Pakistan to China just before months. The first one. It was very risky. We didn't know the quality, how it will fit the Chinese demand smelters. Then we enter vessel. The war started, Pakistan and India. But the truth is the Chinese are looking very, very fast to adapt, and the traders need to be also very concise where these opportunities are laying. This is one of it. Another one that we were working on, the US covering deficits in cement. US is fixed. They produce 100 million tons of cement, and that's it. They don't have any new plants because they don't build it because of climate agenda, so on and so forth. All of the excess demand generated from building, so on, it's covered by imports. Imports in bulk, which you know who is the master there, Ho Robinson, and bagged cement. We've done 3 shipments of bagged cements from Vietnam, which is a booming economy, from Egypt, thank you, and also from Turkey to US. Very, strict operations in discharging their very hard, but this is a structural shift where they just need it and they cannot take it, they cannot produce it. And it was a very well played out by some of the traders. Other of new frontiers. Peru is opening tremendously. We are doing a project of iron ore, magnetite iron ore, which is very, very important for the renewable energy because the other iron ore, it's hematite. The most of the iron ore reserves in the world is hematite. Peru is very rich in magnetite. A lot of small developers there. We built a sourcing platform for small miners, collecting from them because they don't have 2 things. They don't have financial capability to export to world markets. They don't have the freight capabilities. They call to a broker. He gives them $42 per ton to Rizal, and the deal is that. So we as a ship owner entering there and taking the risks and operating these vessels on the bare break-even, sometimes sub-break-even, but compensating from trading margin of selling this iron ore to China is giving the sense and this cooperation between trading and the shipping. That's why it's hand-to-hand, it's totally inevitable. Back then I was working in a multinational, I didn't care about shipping. There was a division, I just sent one email and I said I want $42 from here to there. That's it. If you can get it, get it. Now it's a totally different story that I need to manage. But all of these disruptions are causing these opportunities. Vietnam, booming economy, tremendously booming. Those guys are catching up with the rest of the world like crazy. If you work with the Vietnamese guys, you know how they want to work, they want to trade, they want to do deals, they want vessels arriving in Vietnam, they want to export, they want to import. Vietnam, one of the biggest cement producers around. And giving you an example relating to Trump. The moment Trump got inaugurated in January, my phone blows up. From who? From cement producers demanding petroleum coke, pet coke, for fuel. And I said, what is happening? All of the guys from Turkish cement industry, they busted my phone. Vietnam, they said, give me pet coke, give me pet coke. And I said, explain me what's happening, guys. And they said, look, it's Trump inaugurated. We believe he will end Ukraine. At least he's promising. What will happen after that? Rebuilding. What you need for the rebuild? Cement. Who we are, we produce cement. We need the fuel to prepare. There is a huge inflow of pet coke imports from those cement buyers. Yes, it turns out Trump didn't end the conflict so fast, but the share, how to say, it was so rapid that it was in the moment on the TV he got signed, it started. And you need to react, and you need to be prepared on the shipping side to know, is it worth to go with the Supramax and take this commodity with the Supramax, or I need Cape, who will give me Cape, because capes are not so easy to give around and are prepared for the big guys. And all of this, you need to be absolutely prepared, ready to trigger. The other case is Pakistan. I told you, we have a project for the bauxite there with a mine. We partner. We do a profit sharing agreement. We execute first the whole chain of the deal. from the mine, digging, shifting to the port, agent, PDA, everything. It's horrible. Everything discharging in China, transporting to the smelter, smelting the bauxite and saying, okay, we like it, go on. But again, another very prospectus project, which in the recent months it got a big boost by the Chinese. The Chinese said, okay, go ahead and find us bauxite because we need it, and we don't want to be connected only Australia and Africa. So this is how you see all of these implementations. Yes, these are the cases which we work on and which we utilize the trading margins. Sometimes the vessels are operating purely on the shipping side. They are on a loss, but trading margins are compensating. Sometimes it's vice versa. The trading is very weak margin, but the shipping margin is compensating. And for small companies, compared to the big guys managing huge fleets, for us it's very easy to slip in those opportunities and to try to play them out. So guys, this is my, reading of the global trading, global economy, and particularly on all of the topics we discussed. I believe that globalization is going to be back very soon with huge uptick in trading, and we need all to be prepared. I think all of these net zero things will be driven by these technological guys, which are doing the real saving of energy, optimizing of how things works, how fast it works, how much fuel it consumes. This is the real way of decarbonization. And all of these trading opportunities are there. And without the seafarers, without the marine community, without everyone included, because now as a trader, I fully understand all of the roles in the global shipping and how much important they are. They are make or break some deals. Absolutely. Sometimes it's totally to the logistics, not about the trading, not you see on Bloomberg, not you see on Platts. If the guys don't perform, they don't operate the vessels, you're out of the game, and you're out of the game very, very heavily in some cases. So a big applause for the shipping industry and all of the people working inside, and continue helping the world, the place what it is to be, because there is, the campaign, no shipping, no shopping. Thank you.
Thank you, Preslav, for this informative presentation. We learned a lot about the dry bulk, as they say it. And I just want to add, with iron ore, maybe most of you know that the transportation aspect of iron ore is linked to something very dangerous called liquefaction. And the marine guys here would know that this is a commodity that tends to liquefy on board. And if it does, it can cause the loss of stability to ships. Is that right? And nickel ore is another such commodity. I personally handled a lot of cases, P&I cases, where a lot of surveying needs to be done with iron ore. Philippines, Sulawesi, Indonesia, and nickel ore, and specialized expert surveyors would need to go ashore, and especially during rainy seasons, it's even more tricky because you need to go in the depth of the pile, and just a surface can test would not do the trick. So this is a complex area of the transportation aspect of the ores. But let's not spend that much time on this. I'd like to invite my next speaker here, and this is Nikolai Nikolov, who in fact is a dear friend of mine. When I returned to Bulgaria after having spent 14 years in Antwerp, working for a shipping company, Nikki was one of the first persons I met. And we used to go out for coffees and lunches, and we had so many meetings that gradually we became friends on family basis. I mean, our children have played together. His daughter is now grown up. But I'm very happy to have Nikki with us. He's had background in shipping. He's even been involved with the Japanese Weather Bureau, etc. I think he's also proficient in French, aren't you? His English is outstanding, but French is also a strong side. All right, there you go. So Nikki has progressively developed interests in trade as well, and he'll speak about the trading aspects of what's going on today.
Yes, thank you. I'm taking the floor. First of all, I want to thank to everybody here, and I want to thank to all people that have organized this amazing event, especially the founders, Javor and Captain Paskov, and people that have joined them together through the years, in the face of also Captain Stoyanov and all the crew that has organized this event. Along with the Bulgarian Shipmaster Association. Thank you so much for bringing such astounding and really amazing speakers, because it's thanks to your contacts, your reputation, that you have been able to bring such people that can have value, really, and bring also the, let's say, the light over our region. Since, for many years we didn't have an event. And I will add something that Javor didn't mention. I will speak about a topic which is pretty much related to where my career started. So, and where part of my love stayed in the geopolitics. My career started actually in the Ministry of Foreign Affairs. And the things I learned and the skill and also the school there have actually equipped me with ability to trade better. I've been involved with a major trading house, something that I don't share quite often, but with people that are having interesting exposure to raw materials related to electronics industry. And later on, I've developed myself. I have my own company trading with electronics. And also I'm involved with financing of tech ventures. That's one of the reasons I'm here. I want to see some of the ship tech companies around. However, the topic was brought to my attention since this can change completely the regional dynamics of trade. And that's a very interesting picture indeed. Some people advise me not to put maybe this part, but let's leave the imagination of some people work. I will not speak about this part, but I will speak just about this corner here, this corridor. Well, this is not just the route. That's a fact. And it's been a route, actually, if we come back in history, it's been actually those lands where the Roman Empire has grew, so to speak. So here trades in the ancient times has been somehow created, even before the Greeks. This is a joke. I hope there is not a lot of Greeks. Yeah. So, let's talk about this project, which has never been completed and has been, let's say, stopped on many occasions due to different reasons. And think about, I believe one of the reasons is that this corridor, the Pan-European Transport Corridor number 8, was not sold and marketed in the right way by people that don't understand what is the meaning of integration and having really a Southeastern Europe really completed logistics network, so to speak. So we know here in this corner we have, Okay. So here in this corner, we have the Bosphorus. Everybody knows is one of the, let's say, it's one of the busiest choke points, trade choke points in the world since ancient times. And here we have the Piraeus and the Thessaloniki trade corridor number 10 passing through here. And for some reason, for many years, nothing happening on this area. And let's say that we should look at the corridor not as a competitor of Bosphorus or also the Piraeus and Thessaloniki ports and trade corridor 10, which is passing through Macedonia and Serbia going to the inland in Europe. It's actually a complementary project. It enhances the capacity, the resilience, and helps the Greek and Turkish routes. That's actually a major point that has not been really discussed a lot. So I believe that if we have a broader discussion on this, we can have a sit with all major really established port authorities or commercial agency or even on a government level and discuss this topic. Something that for some reason governments involved in this trade corridor haven't brought to our attention. And maybe there are discussions. I'm actually interested if there are people that are aware of such discussions. We can have a discussion after that on this topic or questions. So geopolitical stability, obviously the region can have and need to have bigger geopolitical stability due to, we can see on the Balkan Peninsula how many different countries, we like saying, well, we are really old, we have our history and pride, and we fight between each other. It's such a mess. It's not a good idea to do this in this global world. And European integration, that's also a political topic. But for the people like us living on the Balkans, it's a major topic since we cannot leave apart the fact that if we have been all within the European Union for a good reason, this corridor would have been completed a long time ago. So what we believe, what my crew and my team believe that has been preparing this presentation and the facts and the numbers that you'll see afterwards is that building a resilient Southeastern European trade network, that's a key. And PETC, which is abbreviation for Pan-European Transport Corridor 8, is not a competitor, but insurance policy for the Balkan supply chain. And here just I enumerated a few problems that are solved. So primary Greek corridor 10, Piraeus, Thessaloniki, and Bosphorus are really operating on their near capacity. We know about the plans of Mr. Erdogan and about a second channel, but let's be honest, it's a very ambitious project, but in times of so much complicated geopolitics, is it really near end to be completed? Even if it is, I would actually claim that there is always going to be a place for an 8 corridor project passing from the other side. And the reason for this is that, okay, even if there is diversion due to congestion to the 8 corridor, there is also something very important, which is about the specific different models on which the two trade corridors, actually trade corridor 8 and trade corridor 10, and the Bosphorus plus the ports which are in the Piraeus and Thessaloniki are working. So here are just a few phrases, but look, the most important one is actually Piraeus and Thessaloniki and Bosphorus, they will stay the mega hubs for east-west trade. The point here is not for PTC it's rather to act which is something that not many people talk about and can imagine, to act as a north-south, which is initially you think it's counterintuitive, but it's not. North-south spoke, distributing goods to different settled destinations. And this is very well explained in the first 2 points. The Western Baltic, the Western Balkans, Adriatic access. PETC will provide direct land route for goods from Albania, Kosovo, Montenegro to the western Serbia to reach the Black Sea, Ukraine, Moldova, and Caucasus. And of course, this is something that our Italian guests would be quite interested to speak about, and I will be happy to speak about in much greater deep conversation, because I have numbers which for the moment I will not present here. And yeah, let's look at this slide. So large container vessels, calling it Piraeus, can efficiently transfer cargo to small feeder vessels. Okay, let's just have imagination and broader discussion. This can always be argued, but it's something that can be possible. It can make sense, of course, if the numbers are showing that the thesis is right. Political and strategic synergy is something that I will not go in so much deep discussion right now. But the most important is integrated logistics network. It's really it's enough to look at the map. So there are trade corridors all over the place, and here the link is missing. It's like a big hole without really strategic transportation happening between Italy and the Black Sea region. All right. So the past, unfortunately, for too many years, it was a big miss of opportunities of regional stability and economic integration, as mentioned. But what a functional corridor can mean: energy, facilitating trade, obviously, broader economic integration, driving prosperity across the Balkans. So, yeah, you can see from the other side some of the trade routes. I will just go to some numbers. I like numbers. I'm sorry, I might be boring, but numbers are the king on some occasions, and imaginations, of course. So here are just a few graphs. The chart clearly illustrates the development in the Balkans that has seen significant growth from $90 billion US dollars to 130 billion for last 10 years. Of course, you can see that this 2020, 2021, of course, everybody experienced this on a global scale. The crucial trade artery here is the Corridor 10, as I mentioned, passing through Serbia and going to Macedonia and Piraeus and Thessaloniki, which is accounting for 30% of the flow. And interesting enough, after the war started in Ukraine, the new river has also experienced significant growth, which was not typical for this route. So in the past, this is just how it started, the idea, long time ago, too long time ago. I was a small kid. And the key challenge still under investments. Guys, I made calls across the ocean. And I also spoke with London, with guys related to big asset managers that everybody knows in the room. And they, on theory, the numbers I showed them, which were not run by some amazing specialist, it's just the data that it exists in the public domain, so to speak, are interesting, but still under investment. The present Albania, in the Milet Marine Highway in Albania, this highway almost in completion, and there is also a railway section in Macedonia, but for many years the biggest bottleneck was practically corruption, and everybody also, I would say it's also reputation. We have extremely bad PR about our region. I've been around, traveling in Africa, in Southeast Asia. I don't know how in China, let's say, supposedly in our mind, maybe 10 years ago, it was a corrupt country, which is not the case right now, as we know. So it's about political will. Yes, it is. But it's also about how you create your brand, because investors that are based in the financial hubs, obviously the financial hubs are not in it's not in Belgrade, and it's not in Sofia, it's in London. And what is the perception about the region? And sometimes discussions are very biased. Of course, people don't have time to spend on a thesis which, if they have something better, branded in their pocket. Yeah, I've met a lot of investors, guys, and that I know how they think. They look at, it's like choosing investment in a startup. They look at the CV of the guy, and if the CV of the guy doesn't fit, they don't even look at his idea. Unfortunately, it is like that. So I didn't speak about Macedonia a lot. In Bulgaria, we know we have this highway that is being built for the last 40 years. It's amazing. It's amazing. It started even before. It was during the time of the socialist influence, and still I was not even born, not even imagined by my parents, and still this highway is not built. That's a funny one. It seems that a political will you need to understand how political will in the region is driven by what. In our corner, it's driven by influence, and in our corner, the influence at this stage, the calls are made by 2 or 3 factors, and it will be interesting to see what is going on right now, and between this moment and next year, within the Ministry of the Transportation in Bulgaria and also the Ministry of Transportation in Macedonia and Albania. And I would invite, I would want to extend this topic to the next year. I would invite, if possible, or really ask the organizers to invite people officially from the ministries of transportation or whatever agencies really, or investment, even agencies of investment from Albania and Macedonia. We have to talk. Also, everybody welcome is of course our Turkish brothers and Greek brothers. We have to talk. And also, why not from Serbia? We have been talking for many years how everybody wants to do something to the other guy. We're so small. Look at the Balkanic Peninsula. We're just 55 millions. Italy is bigger than the whole Balkanic Peninsula. We have to take really seriously the realities. I'm not a political guy, although I speak like one right now. I'm sorry for this, but it's a very important topic that has to be taken to the highest level on a state, the state, and with its infrastructure. Present, the key challenges, I have put it, funding gaps, not enough funding from the state. They rely heavily on some European banks and so forth and so forth. Okay, guys, if you don't have the money, invite some private equity funds. You invite some asset managers. They have the money. They have more money. And they are interested. I can bring a few ones myself. I'm sure in this room there are other people that can bring too. And because they trust me, because they trust my calls, information I give, at least they will have a seat on the table. Fragmented implementation, already spoken. Mountainous terrain, so cheesy, guys. Mountainous terrain, challenging geography, yeah. Of course, we have to put it, it's true. There is a challenge in there are big mountains in Albania and so forth. But look, when we think about the topic, we need to think about the next, not 10 years, the next 50 years, guys. That's the major topic. And yeah, different technical standards, rail gauges, customs procedures. I think that's a side dish that can be tackled. Of course, it takes time, technological time, if you have those, but we have passed 40 years and this is not completed. Come on. And well, here again, the funds, I have really, I was not sure if I have to leave this one or take it out, but why not to leave it? Although I know that those guys are heavily investing in Macedonia for things not to happen. That's interesting. Big money. Why? That's a question. Why? Maybe we have to invite them too and ask them why. So the question is, we have to have a conversation where everybody wins, or at least the ones that don't are not aware. It sounds strange, but that's the reality. We need to be honest with each other and have a seat and discuss. I love this slide. That can summarize a lot. I will keep it for a while. So, trade diversification, I'd say it's a topic. And integration, and also Italy, Southeastern. Actually, this is really beautiful. I really welcome everybody from Italy. We can have a really thoughtful discussion why things didn't happen. Italy has been willing for this to happen for a long time. And it didn't, not because of them. So I think we really a separate event can be created for this, really. Conclusions? We run the numbers. We thought about the ports, how deep we can make them, you know, in Dures, in Varna, in Burgas. Obviously, in Burgas, they have been things in play. I also have heard from a bird that some very serious investors are calling and asking for, let's say, how to place investments in new equipments on ports, which means that there is some movement on the topic. But of course, this is unofficial, and I didn't put it here. I just heard stuff. So 50 to 20% from longer and more congested routes, which can minimize transport time and costs. Everybody, I don't know, ship owners, I don't know, Eileen Marine, they pass through the Bosphorus. Do they wait sometimes? How it is? It's not too bad. Yeah. What means not too good? How much? Yeah, this is for a ship operator, sorry. But so we put these numbers here. 5,000 plus trucks and 100 plus freight trains daily. These are claims that can be argued, of course, but we need to work with numbers or with supposedly some projection. The NATO key logistic corridor in South, I didn't know what to do with this one. Honestly, I don't want to make it political, but that's maybe one of the reasons things doesn't happen. If somebody wants detailed calculations, we have 10 pages with mostly numbers and formulas. Projected economic impact and trade for growth, 20 to 30 billions for the trade corridor if built for 5 years time. So from 20, which means that within 10 to 15 years, it would be 250 billions. These are projections, of course. And those increase in numbers too. If somebody is curious about those numbers, we can talk further. So the key term drivers and short-term, I mean the short-term and the long-term drivers. So the Italian Balkan trade, it's possible, plus 10 billion, particularly in textile and machinery, agriculture, to happen. And also Asia-EU rerouting, which is also depending on, let's say, geopolitics a lot. I would, however, mention something. Presov had an amazing presentation. I really enjoyed it because of my times as a trader in the past. I really enjoyed it. You're a good presenter. However, I say we live in globalization, just it's another type one, and it will continue to be, and it will be relocalization. But people that understand geopolitics and listen to one of the guys related to Stratford, we will understand that this guy was telling this story for the last 15 years, that it will happen, and it happened. So this is just a table. I won't read it. These are some baselines, assumes for the growth. So, call to action, what is needed? Obviously, it's not rocket science. Stronger regional cooperation, blended financing, and European political commitment. I say it European, but because I try to be European citizen in saying all this, but we need to take actions on a local level. We can have a seat. I have invited people from the European Parliament. Unfortunately, they were not able to come. They really want it. They will come next year. And this guy, it's exactly related to the Transportation Commission, to the Commission related to financing. It's a friend of mine. So the topic is already some there. People know about this. We just mention it now, but this will be a discussion that will take more than 1 year. It's not going to be just now. So guys, that's all from my side.
I'd like to thank Nikolai for this insightful presentation. It's really strong, and the last two presentations were really strong on numbers and statistics and data. So as the last speaker of today's forum, I will stay away from numbers. My background is legal, just as these two gentlemen here, the lawyers, and probably others among you. And on top of that, my specialism is insurance. So can you go back a little bit? Or maybe just give me the... No, it's not. Yeah. Is there a... Okay. So... I am conscientious how starving probably you are, so I think everybody deserves a good dessert. My talk is focused on insurance. Let's delve into it. We spoke a little bit about P&I, and I'll touch upon a few war cover cases out of our own experience at Ship Possible. I founded Ship Possible some 8 years ago, and we've seen all sorts of things since then. What really is insurance? When I was a junior in this, I had a call from a barrister working for a P&I club, and he told me insurance is a cost. Costs money, so it's a cost. But on the left side, I've put a few things that probably the managers of companies would think of insurance, namely tedious. Is it really necessary? A lot of people just want the paper to be able to pass Bosphorus. It's expensive. However, with time, I got to understand that insurance is understanding the risk, really understanding the risk in order to be able to put a price on it. And that would include risk management. That would include legal support. If you have an insurer or a club, the club would partner you during litigation, really. That would include local representation and would also include backing you up in difficult times when one of your ships may get detained or arrested in a very unfriendly jurisdiction. And the financial guarantees, the so-called LOUs or letters of understanding of the IGP&I clubs, have the tendency to be accepted and recognized by a lot of port authorities. So to summarize, insurance is really a license to trade. Having an insurance certificate would get your ships all over the globe, and the port authorities would allow your ships to come in and go out knowing that you have the proper financial backup. All right. Yeah. Another thing insurance can be is a pyramid, really. And it's an ugly word, but there is a chain of transactionability starting from the very bottom of the insured. Now, if you're a client, if you're a ship owner, if you're a trader, if you're a charter, you would typically turn to a broker who would survey markets, and he would present you with some options and some conditions and terms and rates. And the broker often would go to an agent. So I'm presenting you how the chain goes. An agent, an abbreviation for an agent is MGA, managing general agent. And the agent would be a sort of a dedicated representative for an insurance company or insurer. The insurer's risks, they're also backed up somewhere in space, and insurers tend to get insured as well by reinsurers, and that can go on forever. Like reinsurers can insure their risks in retrocessionaires, and they could sell the same thing to other retrocessionaires, etc. But as you see, it's a pyramidal structure of passing on the risk against paying premium. And no matter how complex and complicated and really tricky insurance can be, one of the things we see as as brokers is the ultimate bottom line that the client always wants this cheaper, as cheap as possible, getting the same thing but make it cheaper. We just had a case, brand new tug, owner wants to have it past the Bosphorus, and he turned to a broker. He turned to a second broker for the same thing, which is not really advisable. I don't really advise that for the same risk. They surveyed almost all markets, and out of the 10 insurers they approached, they got only one offer and 9 refusals. It was a very unwanted risk. And the price they got for the risk, just for a few days having the paper to pass the Bosphorus, wasn't much. It was just a few $1,000s. And still we got the phone call as a third broker, can you improve that? I mean, my honest view is that you don't always have to really chase bottom dollar just to achieve a paper of insurance, because that paper may not even be worth the cost of the paper it's printed on. Insurance must be something that makes sense, because if your ship breaks, or if it becomes a wreck, or if it spills oil, who will back you up then? I mean, you have a certificate which is hollow, so not really advisable. Just a quick word about P&I. We spoke about P&I. Is P&I really compulsory? In theory, it's not. And nobody really obliges a ship owner to take out P&I, although it would be ridiculous in today's world to run a fleet without having proper P&I insurance. So in theory, not. In practice, absolutely yes. Not having P&I, especially a reputable operator, would be just disastrous. And that would apply to port authorities, flag states, the blue cards that are issued along your P&I certificate, the MLCs. On the business side, of course, if you don't have P&I, you'd hardly be able to fix your ships with any a proper charter. Financiers would simply close their doors, and most importantly, most importantly, whatever transactions you're having with anyone on the other side, they'd like to know if something messes up, who's backing you up. So the very clubs, for example, if you're a new client to a club, that club would have a panel of approved clubs for fixing with the other side. So if you're as an owner fixed with charters, your own club would tell you, yeah, sorry, but we don't want to work with IPIC, which is Islamic PNI, for example, or with China PNI or Korea PNI or this and that, simply for their own considerations. So the clubs would like to know that they have certain clubs of certain level on the other side in order to know what to anticipate when claims arise. Right, we move on, and there will be a few slides on war. Why? Because war is very topical nowadays. War, the label war can attach pretty much to any risk. You could have war hull and machinery, you could have war increased value, you could have war loss of hire, war PNI, war cargo, anything can be war in a war zone. Okay, you as a ship owner, as an operator, you would typically have your annual war insurance, which is pretty cheap. It costs just a few $1,000 and that's it. But that would cover non-listed areas. The listed ones, the hot areas, really would cost a lot more money to be able to cover. We've seen example when the Russian-Ukrainian war broke out. I was called by a lady who was running a chartered fleet, and she was crying on the phone. She said, I've been asked to pay $1.2 million for a week, additional premium. Seriously, to enter a certain port, discharge and leave. And she was like, but it's only a day and a half. And I'm like, it doesn't matter. The war cover is issued 7 days. Minimum 7 days. That's it. So, war areas: Russia, Gulf of Aden, Lebanon, Israel, Libya, Venezuela, Yemen. There's just a few examples, really. Premiums can skyrocket. I mean, they've calmed down nowadays. It's not because it's not so dynamic. But still, some areas are very dynamic. We've had attacks just a few days ago. I mean, as Ali and I spoke. I had a case. I was called by a law firm, and they say, we work on a case. There was this ship which was hit by a missile off the shore of Yemen. Can you help with interpreting what the insurance says about recoverability? I said, sure, send me the policy. What policies are there? Well, there's a hull policy, there's a war policy. All right, let me have a look. So I have a look, and my first question is, when and how was premium paid? Can you send me the invoices? Silence. I'm like, okay. Let's untangle the story. It turns out, owner wanted to cross a high-risk area. But they called up their underwriter, and they say, we're going to Italy. And in reality, they go to the Gulf of Aden. And I ask, why on earth would they do that? Well, because we didn't want the inside information to leak out through the channels, and we don't want our ships to be exposed. I'm like, but you're doing this. This is absurd. You never do that. Why? You don't have to call up your underwriter just to say where your ship is going. You just need to apply for war cover at Lloyd's, preferably, and then take your additional insurance, and that's it. So the simple conclusion is there was no premium paid, and our conclusion was, well, the way we can assist with this, our opinion is that there would be no recoverability. GA was declared. Can we recover something? No, you didn't pay your premium. Your cover's void. Then this was a very, very complex one. The Houthis had declared that any ship passing in the next few days would be attacked, and they put that in writing publicly. And we tried to obtain war cover for that, but the condition of the underwriters at Lloyd's was that there should be military escort on board, and that, trust me, is a hard thing to achieve. It's one thing to have armed guards. There are companies, private companies that do that, but having military service on board is very difficult to get, and it's extremely expensive. As a very broad idea, the quote for a military escort, and that was a small ship, was over $500,000, $600,000 for a passage, which is a fortune. So we got almost at the end, at the final line, but that was a deal breaker, and we couldn't go on with it. There were a lot of questions by the underwriters, of course. The Israeli touch point. Does anybody know what Israeli touch point is? Israeli touch point. Does that ring a bell? Make sense?
Any Israeli nexus involves in either with the owner or their previous claimant.
Right. Say it out loud.
Yeah, well, Israeli nexus is another expression that you can use to say the same thing, but what they're looking for is any connection with Israel in the past, could be in the past couple of years, whatever.
Thanks very much. It's a part of the answer, Jim. Thank you very much for bringing that up. The touch point means not only ownership or nexus, but it also means no ship, not only from the owned fleet, but from the managed fleet of the same manager, having called Israel in the next number of months, 6, 11 months, a year and a half. I've even heard of instances 10 years. It's, again, so extreme. So it's not about the ownership of the vessel. Say, you know how managing companies manage ships not only from one owner, but say from 5 different owners. If a completely unrelated ship from the same managing company has called Israel 2 years ago, underwriters would say, no, we're not issuing policy. So it's super tough sometimes to achieve a result on this. And then, of course, it depends very much what the ship is carrying. Is it IMO cargo? Is it dismantled guns? What's going to be the fate of these guns? Because what the questions we got is, all right, you're carrying dismantled guns. Is that going to be used for military service or just for disposal? And it really depends what the assured answers to sway the underwriter's appetite. This was just a monetary example. This is just a monetary example. So we get a call and we say, a charterer calls us and they say, we are being charged $75K for a passage. Is that realistic? And I'm like, okay, let's check with Lloyd's. And it turns out the same thing costs $35. So we achieve a reduction of 50% in rates. And sometimes you get instances when, I don't want to be rude, but owners tend to send invoices for additional war premiums which aren't really checked or double-checked well enough. And the first thing they get from the market, they pass it on to the charter, and it's the charter pocket that lightens up. So sometimes we defend the charters and we say, all right, we'll double-check and we'll tell you if it's realistic or not. Handling commission of double the price. Yeah, 200% margin. What's this? A maze of variables. Why have I written this? IMO class will have a recent call. Yeah. So another email, and they're like, okay, our ship is going to, is passing, is it? Yeah, it's going to Israel, but maybe it's carrying IMO cargo, give us a price on it. And if it's not carrying IMO cargo, give us a price on it. And if a sister ship is going to the same place, give us a price on that, option 3. And if the same ship is not carrying IMO cargo, going to the same place, give us a price for that. And I'm like, all right, let's open the restaurant menu and see. Okay, truffles and salad, it costs 19 euros. Sometimes you get treated as really a restaurant owner. But insurance is not really by catalog, not very often. It's very much about negotiation. It's very much about gaining trust with markets. It's very much about not trying to outsmart the smart people. Insurance people aren't stupid. They understand the risk. This is what they're good at. They really need to understand what's under. So sometimes they ask a lot of questions. All right. On the consultancy side, because we also act as consultants, so that's got nothing to do with selling insurances and broking. It's just pure analysis. We were asked by a law firm, another law firm, saying we act for a trader. And that trader 2 years ago, we are in arbitration, give us the rate of, issue a statement. You as consultants or brokers, issue a statement what the rate was in 2023 for cargo cover. I'm like, I want to help you, all right. So I make 5 different phone calls. I call Hamburg, I call London, I call wherever another market exists, say the Baltics, and I accumulate an average out of 5 phone calls, and I tell them, all right, I'll issue my statement, but in the disclaimer, I'll write this. This is not an insurance statement. It's not an insurance policy, and you can't rely on this as being an actual insurance rate because there was no policy issued. It's just an average. And then the lawyer on the other side calls me and he said, no, I can't use this. I'm like, sorry, there was no insurance contract issued. Insurance rates are not published anywhere openly or officially. This is not the crypto market. It's not Ethereum. I mean, you can trace down Ethereum like 4 years ago. Bitcoin as well, or it's not the Baltic exchange. This is just a matter of bargaining. You bargain, and with whoever you bargain, you achieve different results. Germany may be cheaper, Lloyd's more expensive, Estonia somewhere in the middle. So this is why we give an average. This was another one. Another law firm, a UK law firm, wants us to tell them well, that's an interesting one, and I'll try to be brief because we're reaching the end. Very often, sanctions emerge as something very wild during STS. And particularly, the innocent party gets affected if all of a sudden the party across gets designated. I've had 2 cases like that. So we act for the charters, and all of a sudden it seems the owners get listed. And the club, our club, says bye-bye. That was it. You went on having dealings with a sanctioned party for 5 hours, 4 days, whatever. Bye-bye. We issue a termination of your policy. And sometime thereafter, I get the same question from a law firm. Consult us on this and tell us if once this has happened, is it possible or virtually impossible for the party that got no insurance anymore to find another insurance? So I spent some time thinking, and I'm thinking, well, as a matter of fact, I tried to be very resourceful, and I managed to find insurance for a distressed client with cancelled policy. But this was 1 out of 100. And I told them off the record, if the broker is very flexible, and if he really, really busts his ass, pardon me, he can find a policy. But in the typical scenario, once you've been refused a policy, and particularly on such grounds, it will be very difficult for you to go to the other clubs. At least because they'd send you an application form, and one of the boxes is, have you ever been refused the cover and why? And how would you fill that out? So once this threshold has been exceeded, it would be pretty hard for you to find insurance again. All right. These are a few things about sanctions, but probably the gist of this is that you can't rely, speaking from an operator's perspective, you can't rely on your insurer to do your due diligence. If the insurer tells you this is sanctioned or not sanctioned, he may be in trouble. Usually, probably the cleanest, the purest way of doing this is outsourcing this to an external law firm. Almost every law firm specializes in this nowadays, and it's the better thing to do. Don't rely on your insurer. And the other thing is, you start a voyage. You're going to Venezuela. Your ship has just arrived, and on the second day of discharge, the agency you're dealing with gets listed. Are you under sanctions? Is the ship under sanctions? You're in trouble. So be vigilant about the duration of your business and check your position on daily basis if need be. I know how hard this is, but you need to really perform your due diligence day by day in order to know you're doing clean business. Right, okay. Who gets affected by sanctions, really? I mean, the cargo, the shipping company, the insurance broker, the ship broker, the cedant, the destination, the flag, the payer, the policyholder, the bank, the currency, the countries, all of these stakeholders in a venture get entangled one way or another in sanctions if a designation occurs. Right. These are typical things. I won't bore you with that. The policy, the way it's called very often with clubs is termination, but there's also another term used, and this is cessor. So a cessor is a very, very, very tricky one. The clubs have a rule which says we, as a P&I association, can convene and in 5 minutes decide to cancel your policy without giving any explanation. And they have the right to do that. Right. That would take a bit too long. I'll just keep these ones. Right. Some conclusions, really. If an operator thinks that insurance is expensive, let him think how you pay a claim. So you're an underwriter. You get 10K premium to put your hand in a bag for a ship that's obviously risky, doing risky business, and then it's a total loss, or it creates an environmental damage, or a canal gets stuck in. You need to pay out hundreds, if not millions. So you try to pay a claim to see how tough it is to agree to a policy. Don't outsmart the smart guys, because insurance are smart people. Consult your broker, facilitator, intermediary, expert, whoever you work with, and be honest about your business. Don't tell your underwriters you're going to Italy when you're going to Yemen. That's it. Thanks, guys. I hope you had a lot of fun today. I'm going to close this. And we want it cheaper, because it's so easy. We want the cheapest possible. Yes, of course. That's the final thing. Yeah, I want to thank everybody really for spending the time here, for having your eyes still open. We'll see you tomorrow. This forum goes on. I'm Yavor. It's been a pleasure.